Yeah. In the section through my body, I know shit jacket. Let me get my camera in this bitch, bro. Bro, I couldn't charge my fucking what's that thing called again? Yeah, baby, sir. Just jack my bobber and I gave him a fate number 3. Said that it's so stizzy because I got no bitches on my D. What the fuck am I saying? Alright, guys, so I think I'm on the right mic, right? Let me make sure that I'm on the right mic just to oh my god. Yes, sir. Alright, we good. We good. I'm Dracula. You a bitch. You a bitch, stupid ass boy. You a little pussy. And I hate you and your little dussy. What the fuck? Bro, why is my shit not working, bro? My shit is not working. But bye. Bro, my okay, we good. Bro, why am I chopped? God damn. I'm like chopped as fuck right here, but you get the point. I'm trying to, I don't know, I'm like fucking, you can't even see me because I'm black. Okay, I don't mean that in like a racist way. What the fuck? Hey, but nobody's trying to see what I said, because skip it about nobody's really here, so. Womp womp. Anyways, you guys can see that if I like once this 15-minute candle closes, if I entry off this shit, I can in fact, bro, why am I going down in time frames? Okay, if this once this candle closes on the 15-minute, I can in fact pull back and then retrace and take the fucking entry there. So I'll put a buy order once we have a candle settled, because I don't want to fucking battle with the demons in my head. It's gonna be like the battle of the O's. She came through my body, I know she dropped it. Like, why is my menu? Oh, that fucking hurts my throat. Okay, so you can see that this is basically the fucking 4-hour fair value gap. Where the fuck is the 4-hour fair value gap? Okay, it's over here. So you can see that this is the 4-hour fair value gap. There's a fucking 15-minute fair value gap within this. So I'm expecting this to be used as like a fucking support level. So I'm expecting price to retest this boundary, sweep the liquidity, and have a market make a buy model inside this. So I cannot. Yeah, so I'm expecting price to use this whole fucking market mega model as like as your mom, stupid bitch. I'm just kidding. Alright, so you see this right here. So I'm expecting price to like pull back because this shit is like I'm trying to show you a trick. Alright, so you can see that this fucking fair value gap in between. This is like kind of fucked. You can see that this area has been used as like a resistance turn support type shit. But yeah, so we're gonna use this fucking fair value gap to go higher. It's consolidated, so ideally I wouldn't be trading this bullshit. Bro, what's up with my voice, bro? It's like fucked. It's like fucked. I gotta go to like the wet because I need some. The wet because I need a cool wet. Because I got the dog in me, so I don't need no doctor. I'm gonna go to the wet so I can get me some lobster. The fuck? I'm tweaking. But yeah, I just talk to myself like this because I'm a psycho bitch. Ha 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 ha. Anyways, the fuck. Alright. As y'all can see, this right here is my fair value gap. Alright. So you can see this is the fair value gap. I'm gonna retest this level and I'm gonna expect like the fucking fair value gap. So you can see this right here. This is the inverse fair value gap. So you can see this manipulation over here. and I'm expecting price to sort of rebalance this fair value gap. I mean, this fair value gap. So that's why I'm confident in the fact that price is gonna keep using this to go lower. That's exactly why I'm shorting, shorty. Okay, that makes no sense. But yeah, that's exactly why I'm shorting. Okay, so I'm shorting on my second screen. So I'm shorting from this. This is the position that I'm holding. I'm shorting from here to here. So I'm getting a 1 to 3. Okay. So apart from that, we have a where is it? Real ass bitch got that pussy on. Okay. I'm not trying to think that shit. That shit sounds like some double dookie, low key. Alright, so I mean I could low key take this trade all the way towards this fucking fair value gap, or at least towards the start of this fair value gap, because I know for a fact that this bitch is hitting for sure. It's like a 1 to 2. So if I entry from like around here, but that would be such a ass trade though, because I have no idea where the fuck this is going. So unless I see a proper manipulation within the fair value gap, like a fair value gap manipulation, because this is the 4 hour. Let me just mark out which one the 4 hour one is. So this, yeah, this is the 4 hour. Yeah, this is the 4 hour fair value gap. So if I go to the 15-minute, you can see that there is a 4 hour fair value gap within. So I'm expecting to take price from this, sweep, and then go higher towards, at least towards this draw. So if I could go from the manipulation swing low to like this fucking draw, then yeah, I would do that. 100%. 100%. USD JPY. Yep. Let's see if the 4 hour fair value gap one. Bitcoin against USDT. So you can see that this has swept the lows. We see this. And I'm expecting to take price a little lower. Oh no. I don't fucking know. And because you see this crap over here, right? This fucking fair value gap. So obviously this has been used. This has been mitigated. And this fucking manipulation, so I'm expecting price to be free. So I'm expecting price to be flowing higher. So you see there is a fair value gap here. Okay, maybe not get rid of everything, but let me actually copy this. Alright, let me just do that now. Alright, so you can see this. There's a fair value gap here. Fuck this shit. So because of this fair value gap, I'm expecting price to pull back towards this and then go higher. Okay, so I'm expecting price to sweep this, pull back towards this fair value gap, and then go higher. So from this swing low. Okay, so this is after sweeping this low, this one. I'm expecting price to entry here and then take it towards whatever this draw is. So that's also possible. On the other hand, USD JPY, no, I wouldn't be trading this. Here, as you can see, there's a huge imbalance right here. So I'm not expecting to entry yet. So obviously, let's see if it aligns with the AUD USD. So this has been used already. So yeah, so this could be used again to go lower. So I'm expecting to see price. I'm expecting to see price not long, but hold up. Jesus Christ, man. Anyway, so you can see that this is the good short here. Yeah, swing this and wing this all the way down here. But I mean, if it pulls back, that is. But if it doesn't pull back, even if it doesn't pull back, like if it eventually reaches here, I can like take this downwards towards like its fucking gap, because it needs to rebalance this price range, this imbalance on the 4 hour, as you can see, this one. So it needs to rebalance this anyway, so it needs to go there. But what I do need to do, because this is already mitigated, so this has been balanced out. So I'm expecting price to retrace until this point, like retest this order block. But overall, let me see if my screen is visible. Yeah, it is visible, right? Yeah. Okay. Yeah, overall, I'm expecting price to sort of pull back and then go lower. So if price does in fact pull back here and goes lower, then yes, I will entry here, because we're breaking structure, so we should have a pullback because we took out these lows, right? So we took out these lows, now we took out these lows as well.
So now I'm expecting a retracement anytime, and we build entry here towards, at least first towards like this draw, right? First towards this draw, because this fair value gap needs to be balanced out. So I'm expecting an entry at least towards a 1 to 2 first, and then hold a 1 to 6 over here. See? So it makes sense either way. So anyways, let's see over here. There we go. Bada bing, bada boom. Let's say, let me just close that shit. Okay. Need to just make sure store is yeah, we good. 476 orders. That's all good. Yeah, all good, all good. So we have so it's obviously news is over now. So 7:30 we have this bullshit. So just refresh, should be already over here. There you go. So now we have this. So it's not really important. So let me just close this for today. So yeah, I'm gonna take an entry from this point if it does retrace here. After it takes this highs, I'm expecting price to like retrace after it takes this high. Retrace and then go higher. Yep, right there, as you can see. There's a 15-minute fair value gap within the 4 hour. So I'm expecting price to be swept at this level and then go higher. Price retest, manipulate fair value gap manipulation, and then go higher. So yeah, turn on the sessions. So New York took out the highs, but yeah, I'm expecting New York to just take out the highs, go lower, sweep, and then go higher. So anyways, that's the potential entry there. This I'm expecting the pullback entry is where I'm gonna entry. So because this is unmitigated, even this is unmitigated, so I'm expecting from somewhere, either this point or this point, it's gonna, you know. But this will give me, if it's this, I won't take it because it's like low RR. C1 1.33, so I'll take it towards this draw. This price rebalance. So here's the CHF. This is alright. Let's see. Stay on the 4 hour as much as possible. Just let's see. This swing low. Are you fucking serious? Are you serious right now? Are you serious right now? Among Us. Alright, whatever. As long as we have this fucking price rebalance, so that, I mean, it's all good. See this fucking gap? So I'm expecting a rebalance and then go higher towards rebalance and this bullshit over here. And yeah, we see a fucking imbalance here as well, so I'm expecting price to, I'm taking this shot. That's what I'm taking. I'm taking it on my second screen. So I've gotten into the position. I just got in like literally a little while back, but yeah, see. So I'm expecting that this should run for like the next 3 hours ish. Not 3 hours, 1.5 hours, because it's like few candles. Damn, am I falling sick? That's crazy. Yeah, so this has been looked into, but this fair value gap has been disrespected in a way. Took out this low over here, the short-term low, so it's an inter-term low in there. See, took out this low, so I'm expecting a manipulation. So you could entry off this FVG right now. Are you serious right now, chat? 1 to 1.7. Should I take this? It's a 1 to almost 2, but ideally I would stay away. Honestly, who cares? I would take it because it looks pretty good. Price action is pretty okay. Manipulate, fair value gap manipulation. Tap back in. So if it does come back, then I will take it. Else I'll just tell it to fuck off. Let me put a pending order there. Stop loss at the lows. TP at the tops. No, TP is up here. There we go. There we go. Let it go. I'm stroking my dick till it blow. Let it go. Let it go. I'm stroking it so hard. What the fuck? Alright, so you can see that this is the... let me get rid of this 15-minute fair value gap because it's so fucking confusing. We do not care. Alright, we do not care. Okay, so you can see that this is the 15 for fair value gap. Seems like we retested this for fair value gap. We took out this short-term low. Now we're going higher from here. So we rebalance this, and then we go towards this. We balance this out, so now we have a bullish bias once again. So the only problem that I have necessarily is the fact that the forward doesn't really have any fair value gaps, right? Because it took this out, right? Took this out, and it sort of invalidated this whole fair value gap, manipulated, and then we have this. So obviously I won't be trading this. This right there, bro, I really didn't do anything with fucking NASDAQ for like the past 7 days. Like, I'm not even joking, past 4 days, my bad. You see over here, we have this. So it seems like it's retracing towards this. Let me clean this chart a bit. Do fresh analysis. Seems like we are good for value. So we have higher prices. See, we have a bullish bias. So bullish weekly, let's say daily. It seems like we are bullish on the daily. We're expecting a retest. Sorry, bearish on the daily. Bearish daily. Even though this is slightly bullish, it's because it's balanced in this price range. So obviously I would expect a retest over here. Like something like this. Something like that. Anyways, bearish on the daily. So yeah, it would retest this level. 1D FVG, yes sir. So see this? This low has been manipulated. This auto block has been manipulated, and it goes higher. Manipulation distribution like. So obviously this has not been tested before, so I'm expecting a price rebalance at this range. So yeah, I'm expecting price rebalance at this range, either here or here. So this whole area is a potential area of interest. So it will sweep after it takes this high, right? It will sweep this, and it will try to sweep either here, or it will try to sweep either here. So it's either over here or here. So it depends on which fair value gap has been retested. So depending on the situation, I would ideally wait for like an inducement from here and then go, because that's gonna be like a tricky situation. Smart money knows how to use that. But yeah, so once it takes out this high, I'm expecting price to go lower. Yeah, it's bullish. See, divergence is indicating the fact that this is bullish. So we have a bullish bias over here. See over here, this is bullish as fuck. Yeah, this is bullish as fuck. US dollar, let's see what it does. Yeah, I'm expecting price retest somewhere here. Because there's so much this can like, this is gonna manipulate this fair value gap low key. It's gonna manipulate this and then go here and then go higher. Because this fair value gap has been manipulated at this point, but I'm expecting, I need to see a price retest over here. So next few days. In the next few days, I'm expecting to take price from there. See, this has been testing price like completely. So after the manipulation, see over here, the displacement's getting ever so smaller. So I'm expecting a potential reversal, but there is a fair value gap, but this is going to get invalidated because it's sweeping all high. So unless it uses this as a sweep, though. So ideally, I would stay away from the dollar index. Euro USD. What's going on here? Oh, seems like we have an opportunity here. Let's see forward. Yep, so we okay, I'm expecting a sweep right here. I think this is like a daily fair value gap. Probably a daily fair value gap. It is, yeah. So it's conflicting, so there's multiple confluences, so I'm expecting to take price higher from here. Because it took out these lows, but you get the point. So yeah, so it took out these lows, it's gonna retest this level. So yeah, I'll take this forward fair value gap. Once it has a proper manipulation though. So I need to see a manipulation within the fair value gap and then take it higher towards whatever its draw is. So I'm gonna use like white lines. There we go. I like white. This is like clean. Look, it's like so much cleaner. So I'm expecting a manipulation and then to take it higher after the retest, basically. So I see that I got an internal term high broken, ideally. This high. So once this has been retested, then I will take it towards this high, because it's battling between these two fair value gaps. Yeah, see, this is the fair value gap that it's battling with. So it would go all the way towards balancing this fair value gap, isn't it? At least towards this fair value gap. Ideally, you would sweep until this point, so yeah, I would expect the price to rebalance until at least up to here. So TP here. Let's see how much of a risk to reward that is. So let's expect price to like rebalance this price. Like, let's say I was entering somewhere like here, and this is like where the stop loss is, and this is where the take profit is. So 1 to 2.8. It's pretty good. It's pretty good. Double trade. I think we should be able to make this work. I'm not too sure though, but we should be able to. Among Us, no. Not Among Us, it's fucking Among Us, nope. There's a price retest right here. It's gonna be another price retest over here. Oh fuck, I think, yeah. So I think the closest thing we're gonna have right now, I think I should organize this based on like the priority. Like the ones that I'm trading right now. The highest being the one that I'm already in, which is GBP USD. Yeah, GBP USD. I have a potential in Euro USD. And I have a BTC USD. Let's see. This doesn't seem like it's right. Doesn't seem like it's quite right. Yep. Yeah, so after the sweep, there might be a retest, so we can potentially enter from here to go higher, but this point. Yeah, so there might be a retest, and we should be able to take it higher. USD JPY, let's see. For the gap. No, I won't trade USD JPY. AUD USD, probably. Yep. It's gonna take a little. Actually, it would be like USD CHF. It's gonna take a while. Probably not. Yeah, probably not. But no. XAU USD. This needs to be rebalanced. So it might pull back and then I could entry from there. Overall, we don't really have like a 4-hour bias though, that's the only problem. So even if we do pull back, it's purely off of the reversal at the fair value gap. Yeah, I think I should just stay away from XAU USD. Oops. And XAG USD. manipulation, and we're gonna have the distribution like right after. Let's see, USD CHF. No, I think a Swiss franc. Yep. Yes, USD CHF. This is retesting, manipulation, and a distribution like right after. Yeah, no, I'm not gonna go for this. Maybe not. I don't know. So I'm expecting this price retest at this fair value gap. This has been retested though. Yeah, this has been retested before. But the fair value gap still exists on the 4 hour, so yeah. I would expect another retest and then go higher from there. Maybe. USD 100, let's see. On the 4 hour, you see this huge gap. So somewhere here I could be potentially entering. But it's probably not today though. USD 100. USD 500, after a retest over here, then yes, sure. From here to here. There'll be less RR though. So I'll take the retest, like fair value gap, like the manipulated retest over here to here. So that would be like potentially somewhere around here to somewhere around here. It's like a 1 to 4.5. Yeah, I would stay away from these nuts. Haha, got him. Nope, way too choppy. This has been rebalanced, so this is rebalanced in this price range, but it's not really doing a good job at it. So obviously I would expect this unmitigated fair value gap to be retraced towards. But as of right now, the only 2 trades that I'm really willing to take are the ones XAG USD. No, I'm not trying to take that. Fuck you. You gotta be out your goddamn mind, man. Yeah, so I'm taking this because I'm confident in this trade overall. So it's all good. Euro USD. See how this plays out. After the interterm high is broken, ideally around here, that's when I would want to see. Like once this interterm high is broken, and then retraces down and uses fair value gap tap to go higher. Yes, over here you can see a price retest over here, and yeah, I'm gonna expect to sweep this liquidity and go lower. It's like a 2.3. Either retest this or no, I would expect the retest at the. Yeah, no, I would expect a retest. I did those, but manipulation, we have a distribution like right after. So clearly it's respecting this. This might be a great trade. I could drag this all the way towards this unmitigated fair value gap on the 4 hour. It's like a what, 1 to 5? Yep, it's like a 1 to 5. Like at least up to here, which is like a proper 1 to 5. Almost 1 to 5, so you get the point. From here, I'd look to entry from either this or this, and then take it all the way towards this fair value gap over here on the 4 hour. So this 4 hour fair value gap is where I'm expecting to sort of take price. 1 to 5. Yep, there we go. So it's a 1 to 5 trade. Let's see. Because we have a interterm low being broken. So we have this interterm low, and we will retrace, tap, and go lower. So you have this fair value gap, which has been. So there's 2 fair value gaps. So either of these fair value gaps will be tested out. I think price would try to like take this out because in this scenario it needs the most inducement, right? So obviously like it will be like you know, let's say you entry here, you still get like a pretty good RR. Sorry. Say your entry was like somewhere here after the manipulation. Even then you still have like a pretty good RR, dragging it all the way down this point, like a 1 to 3. So either of them work. So I think I'm gonna just like let it play out and see which one plays out. This is a 4 for the gap, so I'm expecting a retest to go higher. So let's see how that plays out as well. BTC USDT. Yeah, I'm expecting a sweep and then go higher from there. It's all good. It's all good. Everything's Gucci, man. Yeah, this has been tested, so I'm expecting a retest, manipulation, and then once the manipulation's done, I'm expecting price to take it higher towards this drawn liquidity. So yeah, pretty cool. Let's see how this plays out, I guess. CGUSD. So as you can see, this is a retest in this level. Seems like we have a 4-hour fair value gap here, and we have a retest in price. So if I take a buy position from here, the RR is not. Yeah, this is. I don't want to take this. Maybe I could like extend this, but still, nah. Not really worth the trade, to be honest. Like even if you follow order flow, it's not worth it. So it's mainly the forex pairs for now. Yeah, I'm shorting GBP USD and it's going pretty well at the moment. So I mean, it's not going pretty well, but it's going okay. Because we're still confident of the fact that we're gonna go lower, but the only problem is if we do in fact end up retesting the whole area and just going against it. That's the only issue, but apart from that, it's all good. But I'm journaling, so it's all good. So I'm getting better at, you know, all this. I got a loss today, so it's okay. One loss, that doesn't mean shit. Because we got 3 wins, man. 3 wins, man. You can't expect to win every single time. It's not how this game works. I don't like this blue line. Maybe make it white. There we go. That's less depressing. Yeah, after the manipulation, I'm gonna take it higher towards this draw. Yes, the CHF. This is a white line, and this is a white line too. Yep. Let's see how this goes. That was a good session of charting. Let's see how price plays out, I guess. GBP USD seems like we're shorting, so yeah, I mean that's exactly the position that we're on. So we're expecting a price rebalance at the 4-hour fair value gap. So yeah, over here, it aligns perfectly with this swing low. See, towards like right after the manipulation. So ideally, I would take it towards like this swing low. I think. Wait, let me go on 4-hour. We modify this to just, you know, because I don't want to like restrict. Like risk it too much towards the sweep. So I'm gonna take it towards the swing low. Okay. Towards. What the fuck? Why is the chart not the same shit? Oh, it's over here. Yeah. So it should be right here. This way, the fuck? What? Yeah, I think. Yeah, okay, never mind, I got it. It's right here. So I'm gonna put this TP at this former swing. And I expect the price rebalance right after. Yeah, there we go. Yeah, there we go. All good, all good. Alright, so everything's good. So let's see. Now let's look at the sessions. Alright, let's see how the sessions played. Oops, my bad. Let's see how the sessions played out. Sessions. GBP USD. Your USD is alright. So this is like pretty cool. After the manipulation, once this entered some high pullback, Expecting a fair value gap entry somewhere around here. So ideally, if I can have at least like a 1 and 2, that would be great. AUD USD over here, it's like a 1 and 3, 1 and 3 minimum, or 1 and 5. So depending on what sort of retest we see, ideally I would like to see a 1 and 5, so that way I have a much higher RR. So, but it's okay if even a 1 and 3 is like pretty good. So yeah, let's expect, because we need to make sure this inter-term high is broken, swept, and then this fair value gap entry is what we entry off this F15 minute FVG, going towards the higher forward unmitigated fair value gap right here to exactly this point. Oops, my bad. You get the point. It's pretty easy. It's pretty fucking easy. Bro, this shit is like easy as fuck once you understand this whole concept of supply and demand. So over here you can see that this is an unmitigated fair value gap, so this sweep is parallel to it, so that's why I'm expecting a sweep and then go higher, even though the displacement right now is like pretty low. You see, this could be retested though. That's the only question, but I really doubt that. Even if it retests, it's like, you see this huge imbalance, so I'm gonna expect price to go lower, because we had this sweep on the forward to go lower displacement, distribution, like Euro USD, 15-minute FVG, AUD USD, USD CHF, BTC USD, no, US 100, yep, it's all good. Yep, let's see how this plays out.
Someone that focuses mainly on the higher time frame, and because they the context area where we can start looking for our entry. So the end goal is to find a high probability context area, and what is the highest probability scenario that we can have. This is where the path for certain traders will divide, meaning you are either going to be a filtering process trader and you're going to use a filtering process for your top-down analysis, or you are going to be a flow trader. The way you will approach the market will be slightly different if we're talking about these two. Now, before we go over what those are and what the difference is, we first need to understand that you can determine your own trading style, meaning depending on what type of trader you want to be. For example, a long-term trader, you want to hold positions for months and months, or you want to be a scalper and you only want to hold positions for a few minutes. That is going to determine which concept you are going to be using on which time frame. For example, for a long-term trader, you want to focus on monthly market structure. Again, you can get extremely creative with.
I don't want to hold that much, but I don't want to be a scalper either. So I want to. That's why I use daily and 4 hour. So I mean 4 hour for my confirmation entry bias, confirmation bias, and then you get the point.
You're not limited to what I'm telling you to do. You can determine how much time you have throughout the day. So for example, I would advise if you have a lot of time throughout the day, you want to go down time frame, so focus on the lower time frame. If you don't have a lot of time throughout the day, then it's easier to focus on the higher time frame. So for example, become a swing trader. The reason why that is because if you're going to be a scalper, you're going to be focused on the lower time frame, it requires more work during trading. If you're going to be a higher time frame trader, it requires more work and more time up front. So not necessarily when executing trade IDs. So for long-term traders, monthly market structure might be interesting. For me personally, it's not that interesting because I don't care what the next monthly candles want to do. I only care what the next monthly candle wants to do. So candle science on the monthly for me is the most interesting. But again, that all comes down to what type of trader you want to be. To give you a few more IDs, you can for example also look only at weekly order flow. If you mainly want to be a weekly trader, also a longer term I would argue. Or if you want to go more into day trading style, you can also focus just on daily candle signs and only focus for example on 4 hour order flow instead of daily order flow. There's no limits to this. You can also focus on 1 hour candle signs if you want to, and if you want to learn how to do that. Again, this is all instead of daily order flow. There's no limits to this trading style. You can also focus just on daily candle signs and only focus for example on 4 hour order flow instead of daily order flow. There's no limits to this. You can also focus on 1 hour candle signs if you want to, and if you want to learn how to do that. Again, this is also where I need your help because this is your personal preference. We are not all the same. We all have different lifestyles. We also have different preferences, but I can help you, and I can help you through the following. The first type of trader that you can be is a filtering process trader. A filtering process trader is someone that focuses mainly on the higher time frame. And because they focus on the higher time frame, which requires a lot less time, for example, they can focus on multiple pairs. If you are planning on being a filtering process trader, I would advise to focus on Forex pairs. And when you focus on multiple pairs, you can then make use of arguments right there. And arguments means that you are always looking for the highest probability price action on multiple pairs. So let's say you have 10 pairs, and from those 10 pairs, and arguments means that you are advised to focus on Forex pairs. And when you focus on multiple pairs, you can then make use of arguments right there. And arguments means that you are always looking for the highest probability price action on multiple pairs. So let's say you have 10 pairs, and from those 10 pairs, they're going through the filtering process. So you're going to add argument through a top-down analysis. And then from those 10 pairs, you will determine that one of those pairs is the highest probability.
Yeah, I mean, I already have this, but this was a loss because this is exactly the $12 loss that I was talking about. Because this was an inducement. This was a trap. I got trapped during this order block. That was so fucking stupid, and I could have avoided this if I waited for an internal time high to be broken. But no, I just decided to take it. I was going against my rules. That's exactly why I fucked it up. So, went against my rules and fucked up. Simple.
That's the one you want to be focusing on. So let's do a top-down analysis for a filtering process trader, and we're going to do it currently on GBP US dollar and what we're currently looking at euro US dollar. Now you can do this for, let's do a top-down analysis for a filtering process trader, and we're going to do it currently on GBP US dollar and what we're currently looking at euro US dollar. Now you can do this for a lot of pairs. For example, I do it for the Forex major right there, and I also focus on the crosses right here. Now for myself and for my personal trading style right now at this moment in time, I want to focus on monthly candle signs. So if I look at monthly candle signs right here, in the previous candle, I would argue that we might want to continue lower. But the current, I want to focus on monthly candle signs. Also focus on the crosses right here. Now for myself and for my personal trading style right now at this moment in time, I want to focus on monthly candle signs. So if I look at monthly candle signs right here, in the previous candle, I would argue that we might want to continue lower. But the current candle that is forming, that more so looks like we do want to continue higher right there. Then once we go down the time frame into the weekly right here, we can see that we have a potential sweep towards the left right there. But we do come into fair value gaps, and the most recent price action was bullish fair value gaps to continue higher. So up until this moment, we could argue that all we have are arguments still for the bullish side. Again, the way I see arguments is simply through order flow, market structure, and candle. We could argue that all we have there, but we do come into fair value gaps, and the most recent price action was bullish fair value gaps to continue higher. So up until this moment, we could argue that all we have are arguments still for the bullish side. Again, the way I see arguments is simply through order flow, market structure, and candle signs. So when the most
Order flow, market structure, and candle signs. Yes, I get it. And you just note that down. Order flow is how the market's flowing, right? Market structure and candle signs, obviously. So
the recent order flag is a bullish order flag,
alright, hold up.
that is a bullish argument. You need to see it like this. You are in the middle of two sides. You have a bullish side and a bearish side, and they are both giving you arguments, objective arguments like order flow, market structure, and candle signs. And when both give you arguments, eventually they will either be very one-sided, so either the bullish side has the most arguments and there's no bearish arguments. When that is the case, that's extremely high probability for higher prices. But when you have bullish arguments and a little bit of bearish arguments, then that's not high probability. Then we can argue it's more so 50-50. So high probability for higher prices, but very one-sided, so either the bullish side has the most arguments and there's no bearish arguments. When that is the case, that's extremely high probability for higher prices. But when you have bullish arguments and a little bit of bearish arguments, then that's not high probability. Then we can argue it's more so 50-50.
Because trading's all about probabilities, so.
So here we have bullish order flow. We also have this respect candle at this moment in time from that fair value gap. So in my opinion, we could actually look at some higher prices. So let's dive into the daily time frame right here. Now on the daily time frame, we see that we just have an expansion phase candle higher right there. If you're not already coming from previous context, daily time frame right here. Now on the daily time frame, we see that we just have an expansion phase candle higher right there. If you're not already coming from previous context, so in this case, we're also coming from weekly context. That means we can also go into the 4 hour as a filtering process trader. If you do not already have either daily, weekly, or monthly context, then do not go into the 4 hour. You want to have a minimum of daily, weekly, or monthly context first before going into the 4 hour and lower. So here on the 4 hour, we do not have a context area 4 hour. You want to have a minimum of daily, weekly, or monthly trader. If you do not already have either daily, weekly, because we're also coming from weekly context, that means we can also go into the 4 hour as a filtering process trader. If you do not already have either daily, weekly, or monthly context, then do not go into the 4 hour. You want to have a minimum of daily, weekly, or monthly context first before going into the 4 hour and lower. So here on the 4 hour, we do not have a context area just yet. Now a third candle will form right there. Again, remember we talked about those news events. If for example Monday right there doesn't have any news and Tuesday does have news, we could potentially see a fair value gap created right there to then continue higher. On the 4 hour, we already have a fair value gap right here. On the 4 hour, we do not have a context area just yet. Now a third candle right there. If you're not already coming from, let's dive into the daily time frame right here. Now on the daily time frame, we see that we just have an expansion phase candle higher right there. If you're not already coming from previous context, so in this case we're also coming from weekly context, that means we can also go into the 4-hour as a filtering process trader. If you do not already have either daily, weekly, or monthly context, then do not go into the 4-hour. You want to have a minimum of daily, weekly, or monthly context first before going into the 4-hour and lower. So here on the 4-hour, we do not have a context area just yet. Now a third candle will form right there. Again, remember what we talked about those news events. If, for example, Monday right there, on the 4-hour, we do not have a context area just yet. Now a minimum as a filtering process trader. If you do not already have either daily, weekly, or monthly context, then do not go into the 4-hour. You want to have a minimum of daily, weekly, or monthly context first before going into the 4-hour and lower. So here on the 4-hour, we do not have a context area just yet. Now a third candle will form right there. Again, remember what we talked about those news events. If, for example, Monday right there doesn't have any news and Tuesday does have news, we could potentially see a fair value gap created right there to then continue higher. On the 4-hour, we already have a fair value gap right here, which we could potentially already continue higher from if we have news supporting the ID as well, higher time frame time. Higher. On the 4-hour, we already have a fair value gap right here, which we could potentially already continue higher from if we have news supporting the ID as well right there. Again, remember what we talked about those news events. If, for example, Monday right there doesn't have any news and Tuesday does have news, we could potentially see a fair value gap created right there to then continue higher. On the 4-hour, we already have a fair value gap right here, which we could potentially already continue higher from if we have news supporting the ID as well, higher time frame time. So euro US dollar looks quite alright to reach this target right there from the 4-hour value gap or daily value gap sitting right there. The only confusion right there is the 4-hour value gap or daily value gap. Now if we reach this target right there from the 4-hour value gap or daily value gap, news supporting the ID as well, higher time frame time. So euro US dollar looks quite alright to reach this target right there from the 4-hour value gap or daily value gap sitting right there. The only confusion right there is the 4-hour value gap or daily value gap. Now to reach this target right there from the 4-hour value gap or the daily value gap sitting right there. The only confusion right there is the 4-hour value gap or the daily value gap. Now if we take a look at GBP US dollar and compare it to euro US dollar, then right here we have a respect candle very similar to euro US dollar. Now the difference right here between GBP US dollar and euro US dollar is that currently we have a down candle actually. We could argue we have somewhat of rejection at the bottom right there, but not significant just yet. It's a lot weaker, for example, than euro US dollar. And if we want to look for high prices, very logically, of course, euro US dollar is going to be higher probability. Now, if we look a bit further and we go into the weekly time frame, then on the weekly time frame, we also have a few fair value areas right there. We still have bullish order flow. We are respecting this fair value gap right there, but not as convincingly as euro US dollar. Okay, well, let's dive into the daily. Maybe it looks completely different. On the daily, we see we do not even have a daily expansion phase candle right here, where euro US dollar did have that expansion phase candle. So again, that determines that euro US dollar is a lot stronger. In other words, if you want to look for higher prices, euro US dollar is a lot higher probability. Now, on GBP US dollar on the 4-hour, we do also have this 4-hour value gap sitting right there. But again, is GBP US dollar or euro US dollar the 4-hour value gap then higher probability? I would argue euro US dollar because you also have this 4-hour value gap sitting right there. But again, is GBP US dollar or euro US dollar the 4-hour value gap then higher probability? I would argue euro US dollar because it was a lot stronger, it was a lot more bullish. The respect candles were very clear. We had expansion phase candles as well. A lot more arguments for euro US dollar to be bullish. Now, this process is something that you can do for a lot of pairs, and that's something that I do in the MMT, for example, in the daily forecast. And through that, I always share the highest probability pair that you can trade with the MMT members. Now, next to a filtering process, you also have, of course, a flow trader. And this is just essentially the exact opposite of being a filtering process trader. A flow trader focuses more on the lower time frame, in brackets, lower time frame, because the higher time frame, of course, is still important, but you're going to go down more time frames. So you're more likely to be active on the 1-minute time frame, for example, where with the
Scalper. You're a scalper.
filtering process, you saw me already stop at the 4-hour time frame. Now, as a flow trader, you want to focus on one single instrument. Since you are going down a lot more time frames, it requires a lot more focus, a lot more work during your chart time. So that means if you have to go through a lot of pairs going down time frames, your focus is going to be all over the place. Now, if you want to be a flow trader, it's extremely
That's right. I should limit myself to like the type of indices that I'm like, indices and overall, not even indices, like everything that I trade, I should just like limit myself down. Whatever that I have the highest accuracy, I'm just gonna stick to it, because like even like whatever that has a good spread, highest accuracy, cleaner price action, I think Euro USD is probably my best bet. Euro USD and NASDAQ, because NASDAQ has like clean price action, and NASDAQ is my baby because I have one index and one forex pair. Because I don't want to be like trading like 15 different pairs and just looking for every little hole in every little goal with every little hole I find. So that sounds weird as fuck. But anyways, it sounds super fucking weird. But anyways, let's go on.
Important to understand which instrument you are going to choose. You want to choose ideally the most volatile instrument. The indices are my advice because the indices are extremely volatile. Even
Indices have high volatility, that's right, than Forex. Indices have higher volatility. So S&Ps and NASDAQs, US30, fucking, what was it? Russell. And what was the other one? I forgot the other one, YM. Indices have higher volatility than Forex pairs. Even the dollar index, Forex pairs.
even with no
Because as long as it says index, if you guys are watching this, if it says index here, that means it's a index. And multiple indexes, it's indices, so
news, equities open brings in a
plural, so.
volatile instrument. The indices are my advice because the indices are extremely volatile. Even with no news, equities open brings in a lot of volatility. And since you are reliant on one single instrument, you are reliant on that instrument providing the most high probability conditions. And the high probability conditions happen when we have enough volatility. And we want to have a lot of volatility because ideally we are not consolidating for a whole week. So still, there will be enough opportunities.
Speaking of news, you can see tomorrow we have this at 2:30. So for Euro USD pairs, this would be we'll need to look into this if we are gonna trade Euro USD tomorrow. But ideally, oh fuck guys, yeah, no, not yet. Yeah, this is okay. This is an okay pair to take a trade. So probably the highest accuracy actually now. Yeah, this is the spot where I'm expecting an intro. Market structure shift. So expecting market structure shift.
Within that week as well. And again, my advice would be take a look at indices. So ES, NASDAQ, YM, or even Russell. Now also for a flow trader, you are most likely going to have a higher trade frequency. Now how
Yeah, because you're scalping. You see a million different trades every single day, of course.
is that possible? If we just
A million losses and one good trade. That's what a scalper. An average scalper's win rate, basically.
mentioned, a filtering process trader focuses on multiple pairs. Well, a filtering process trader focuses on multiple pairs to be the highest probability. A flow trader also focuses, of course, on high probability situations. But since if you go into the 1 minute time frame, of course, there's a lot more candles. So there's potentially also a lot more opportunity that can also be high probability. Whereas if you're a filtering process trader, you're going to wait a lot more. Again, when I say higher trade frequency, I do not mean in one single day there will be 10 high probability trades. No, there could potentially be a high probability trade every single day. But if you have 3 high probability trade IDs throughout the week, then you are doing really good as a flow trader. Whereas a filtering process trader, you might only see a really high probability.
That's right, because if you're taking like 3, like let's say 1 to 3 ratio, 3 high probability trades, and you know for a fact that you're gonna get, that's gonna hit for sure, and you're risking more money, like let's say for example $200, and you're going for a 1 to 3 ratio, which means every trade you'll be making $600, right? And then you take 3 of those every single week, you make what, $1,800, because you have an extreme high probability, and you're not risking the 200 in every trade because you're risking it because you know that it's gonna hit. You know what I mean? So overall, you're making what, 1,800 every single week. So that's like some people's fucking monthly salary, bro. If you think about it, $1,800 is like some people's fucking monthly salary. You're making that shit in a week. That's fucking wild.
Trade 1 time a week. So set your expectations right as well. So as a flow trader, you are still going
even like a 1 to 4. If you go for like a 1 to 4, because if you're finding high probability trades, you go for like a 1 to 4. So if you're going for a 1 to 4, you risk $100, you make $400 every single trade, and you make 3 of those trades, right? $400 every single trade. So now you have what, 500 total made, right? Sorry, 400 profit and 500 overall, right? So you'd have what, about 1,500, 1,200, 1,500 somewhere there with every single trade, because you will be saving that $100 that you put in, and you'll be making 400 on top of it, so you have 1,500. Instead of the 1,200, because that's 1,200 profit, you still save 300, 1,500 in a week. That's a week, by the way. So it's what, 4,500 every week, every month? No, more than that. 6,000, 6K every month. That's not that much of a salary, though. Let's see.
going to want to understand what the higher time frame is doing, but you're going to take less peeks at it, meaning you're not all the time going into the monthly time frame every single day to check what it's doing. Now with a filtering process, you're most likely also not going to do that, but you are going to do it more than a flow trader. So on the monthly right here, we could argue that we might want to continue lower towards that swing low right there. But for a flow trader, that's just not relevant. That swing low is so far. Whereas for a filtering process, monthly right here, we could argue that we might want to continue lower towards that swing low right there. But for a flow trader, that's just not relevant. That swing low is so far. Whereas for a filtering process might be interesting to the higher time frame to trade towards it. Flow trader, who cares? There will be a lot more opportunities before we even reach that low right there. Now we can keep it on the chart just so we understand the overall direction as well. Then if we go into the weekly, we see that we have just taken out this weekly swing low right there, which is quite important to understand because you're going to be a lot more of a ping pong trader, meaning you're going to be bullish, bearish, you're going to switch a lot more. And the lower time frame is going to be your guide in that. So because you're going to be a lot more of a ping pong. Then if we go into the weekly, we see that we have just taken out this weekly swing low
Ping pong trader. That's so accurate. Just
right there, which is quite important to understand because you're going to be a lot more of a ping
like those. You have that thing on the top, that thing on the bottom. You just like bounce between each other. You see which one's getting respected, which one's not. So it's pretty simple.
pong trader, meaning you're going to be bullish, bearish, you're going to switch a lot more. And the lower time frame is going to be your guide in that. So let's also dive into the daily right here. And the daily is where it gets interesting then. So on the daily, we can actually see that we are going to potentially create a daily fair value right there. So we're going to be trading a
If you have one good trade, like let's say for example, if you make 10k in like as all these big gurus say, like if you make 10k in like one good trade or even in like a week, that's like a pretty good amount of money. If you can make 10k every single week, that's like 40k a month. You don't need to do anything else. But to get to that level, you need to be really, really fucking good. So
third candle heading into Monday. Now let's see if this sweep can cause a little bit of retracement higher to trade back into the daily value gap to then potentially continue lower again. Let's dive into the 4 hour. On the 4 hour, we have this fair value gap right here, and we also have this swing low. This is where it gets important because now you are in the middle of two PD rates, and the 1 hour and the 15 minute is going to guide you towards one of those PD gaps to then potentially continue lower again. Let's dive into the 4 hour. On the 4 hour, we have this fair value gap right here, and we also have this swing low. This is where it gets important because now you are in the middle of two PD rates, and 1 hour and the 15 minutes is going to guide you towards one of those PD rates. Meaning, if we take a look at the 1 hour right here, what do we see? Well, we also have that swing high, which is again below the 4 hour value gap, and we have this swing low right there, which is the 4 hour swing low. On the 1 hour, I would argue it's not that clear at this moment in time. On the 15 minute, the only price action that we currently have is this 15 minute fair value gap, which we might want to continue lower from. Now, as soon as we start creating those fair value gaps to continue lower right there, we can see usual context forming, which we might want to confirm on the 1 minute time frame to then target this low right here. So as a flow trader, you're reacting a lot more, and that's why it requires more work when you're actually trading. For example, this might not happen, and we might actually create fair value gaps going higher right there, and these fair value gaps might actually fail to then still continue lower. So it's a constant thing. For example, this might not happen, and we might actually create fair value gaps going higher right there, and these fair value gaps might actually fail to then still continue lower. So it's a constant reacting. But the important part is that the 15 minute and the 1 hour fair value gaps, they are your guide. So they will tell you towards which higher time frame PD rates we want to trade towards next. It's important to understand that being a flow trader is not necessarily better than being a filtering process trader. So both methods will help you in different stages of your life as well. For example, if you're very busy again, filtering process could be very interesting. But also, if you're gaining more capital, eventually you will reach a capital amount where flow trading is just in general not that interesting anymore. So you can go up time frames and become a filtering process trader. But when you're just starting out, make sure that you stick to one and master that one first before you move on to the other method. Because there are a few downfalls that I want to go over as well. And a few of these downfalls are the following. I need you to understand, don't backtest. Now, hindsight backtesting is okay, like we're doing, for example, in the videos. We go over examples in hindsight. That is purely to train your eyes to see what is happening. Replay backtesting, so actually going back in price and replaying the price action, not something I would advise. The reason for that is because it builds bad habits into your trading. For example, you can take a loss, you can click 5 times, you're 5 days forward, and you can take a winner. Whilst you won't realize it just took you 5 seconds to take 5 clicks. But in real time, when you are live trading, it will take you 5 days. So you need to have a lot more patience as well. So when you go from backtesting to a live environment, you think, well, where are all the trade opportunities? Why does it take so long? That is because trading is all about patience as well. So my advice, don't backtest. Then the second advice, and this might seem very logical, is learn from your mistakes. Now again, I say it might be very logical, but a lot of people don't do it. Some traders have been trading for 5 years and they have not seen any profitability yet. And that is simply because they don't learn from their mistakes. You're going to be in endless cycles if you just keep on repeating the same mistakes over and over. And I would also argue that one of those mistakes is the following. I've mentioned don't incorporate other concepts outside of the MMT. The reason why this is so important is because otherwise we will not get the same results, we will not get the same accuracy, it will simply be worse. Because the concepts here are designed to incorporate a lot of concepts as well, just simplified. So focus on the concepts that we have here and stick to it. Then this is unfortunately already the end of the MMT series. This definitely won't be the last series on this YouTube channel, and I definitely won't stop providing value. And if you're interested in even more value, then you are definitely going to like the MMT as well. Feel free to check it out, link in the description, it is ario.io. And then I want to massively thank you. I'm very grateful for you watching the videos as well. If you follow the steps, if you stick to one mentor again, and if I may be that mentor, then I'm very honored, then you will succeed. I can guarantee you that. Well, I can quote unquote guarantee you that as well, not financial advice. All right, perfect. Thank you.
Shout out to Aja, bro. He literally had the whole sauce
About probabilities.
end to end.
So that starts with, we need to know what a top-down analysis is actually for. What's the purpose? The purpose is to find a draw on liquidity. And once we find that draw on liquidity, we need to find our narrative, that is the PD rate, on how we're going to deliver there. And that is exactly where we then want to look for our entry pattern. So what did I mention first? The first thing I mentioned was finding the draw on liquidity. So what is the draw on liquidity? The draw on liquidity is a target. So what then actually is a target? In price, we have multiple PD rates. Well, nowadays we have millions of PD rates, but I'm
Shout out to Aja, for real. Like, this guy is the GOAT. I'm not even kidding. Like, this guy is the GOAT. Like, literally everything is here. It's such a good tutor. Look at this. breaking down an order flow leg, does all three PD areas. So we have this fair value gap, first line of defense, and an overlap in defense with the fair value area, 1, 2, 3 FVA, 1, 2, 3. And we have this last line of defense, which is the swing point. So this is basically a sharp turn, in other words. Or if you have order flow, you should be following this. You should be rebalancing this price. So price should go lower and barely rebalances, especially in a higher time frame context. So let me see if my headset is like fully charged. But anyways, you get the point. So as you can see, we manipulation, distribution higher. This is like something that you don't really need to pay. Oh, it's already fully charged. Okay, that was quick. I didn't expect this thing to like charge so fast. So anyways, so yeah, that's pretty much as far as right now goes. So as you can see, context areas, it's pretty simple once you get the idea. So yeah, let's go for this.
Sticking to these PD rates that you see right here, which is mitigation block, breaker block, order block, fair value gap, swing high, swing low, swing points, and we have previous candle high and previous candle low. Those are all the PD rates that I use in my chart. Gives me a lot more accuracy if we don't have our chart clustered with all hundreds of PD rates. So a target is a PD rate. And why a PD rate? Because price is always moving towards a PD rate. It is our job as traders to find out towards which PD rate we are moving next. And if we can find out towards which PD rate we can move next, that is understanding the direction. And that
Now what I should do is stop learning and just like focus on accuracy, executing and learning from it. Because I'd be just stuck here, just learning for the rest of my life. I overall learned so much though. It's like, shout out to my mentors, man. Ajo, especially Ajo, Mulham Trading, what was the other guy? Casper Simpson. Some people say Casper is a scammer, but honestly, like, I don't really buy his like courses and stuff, but like his fucking like content and shit was fire. It was fire. Like, I learned so much from Casper. I've also discovered this one guy with an African accent. This is called Forex strategy, easy Forex strategy. This guy, so he's also pretty good. He is also one of the goats. So high time frame fair value gap needs a manipulation done within on the lower time frame. Typically, that's right. Typically a forward fair value gap paired with a 15-minute sweep distribution reversal. That's right. So this is basically where everything sort of happens, I guess. Sorry, just grab this here. There we go. So over here, you can see that this is basically like the fake out. So anything that comes from a breakout trend, you wouldn't trust this unless it's backed up by the fact that this inter-term high is broken. The swings are broken, essentially. You know what I'm saying? So inter-term high broken, and you see this displacement downwards, and then you see this fair value gap being rebalanced to go higher. So this right here is the start to market make a buy model. Now a lot of retail traders might see a breakout below this and then think, oh, market shorting, so reversal. They might be getting caught in a manipulation. Boom, all the way back. So support and resistance is the devil. And if you can use support and resistance and see where the people who are falling for the devil is, then you made it. You haven't made it, but you have a better understanding. You know, that's like the whole concept. So it's pretty simple. Like after you get the idea, what the fuck? Just seeing my friend like randomly out of nowhere, just see this like jump scare in my face. Avoid news market. It's gonna be on my phone for a bit, but what the fuck? So we gotta get back on the dropshipping grind too. Let me chill for a bit.
Everybody knows
What a day. What a day. What a day. What a day. What a day.
Bro, you fucking serious?
Gotcha. Mind your own way. What? Fucking small step is a big step for a giant, or some shit like that. So you can see that this is the supply zone. So you see the manipulation right after. These are supply retests, and the Faraday gap following it is basically inverse Faraday gap, and you can use that. I mean, it's definitely an unmitigated Faraday gap, and you use this as an inverse Faraday gap to go lower towards the drawn liquidity, so side liquidity. So it's pretty simple if you think about it. And this breakout trading is not something that I want to do, but I'm pretty sure there's a manipulation somewhere in here. Boom, above the resistance, and then support and resistance. And then you see this pullback towards the Faraday gap, and then it goes higher. You need evidence. Now, the way I would look at this is the manipulation here, and then this as the price retest at the fair value gap. So I would expect a price break a structure and then like price retest. So create order flow to go higher. So that's the only scenario when I would really consider any of the other outcomes, you know what I'm saying? But yeah, that's pretty much it for right now. So you can see that's demand zone, and see this price retest over here, and then we can retest to it and then go higher. It's pretty simple. It's pretty fucking simple. It's pretty fucking simple. Price action right now is fucking slow. Let me check market volatility. Market should be volatile today, but price action right now with GBP USD is so fucking slow. Probably because I'm trading outside London hours. It's like almost the end of London hours, so I'm expecting price action to be so fucking slow. Yeah, price action is gonna be so fucking slow. Because it's almost outside London hours right now, see? So it's like almost about to end, so look. It's at 4:17 and then they end in like literally like 43 minutes. That was some quick math. But yeah, because it's 4:17 and they end at 5 o'clock, so yeah, so GBP USD, you know how that's gonna go. So let's check the rest of the pairs. Let's see how they're doing. See how they're doing. What do you do? What do you do? Yes, sir. This is inverse. Damn, I just made a beat.
That shit sounds like some fucking African bullshit. 1 to 4 ratio. Where is this? I could take this, honestly. It's a Euro USD trade. Euro USD. It's on the 15-minute time frame. And I'm expecting to take price from new order, pending order. Let's go, Bobby. Let's go, Bobby. Bobby, bitch. Sucking mad dick. Life is plastic. It's fantastic. You can stroke my dick and touch me anywhere. Whoa, 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 whoa. Let's go, Bobby. Let's go, Bobby. I'm a Bobby, bitch. Sucking mad dick. Life is plastic. It's fantastic. I forgot the rest of the fucking words. But you see this take profit range right here? So I'm gonna aim towards this. Yeah, towards this, and then I'm gonna use this as my stop loss. This low, this swing low. Can I take like a 1, 2? Oh no, I don't know. If I'm like risking this much money, I gotta be out of my fucking mind. Oh yeah, there we go, $69. I'll say so. Some $69 type shit, you feel me? So I'll go for that. It's gonna be a bit of a fair value gap, but ain't it, brother? Yeah, let's go for it. It's a bit risk. I'm gonna risk big for this, cause your boy is trying to eat. You feel me? But yeah. Anyways, Euro USD. I mean AUD USD. My bad. Forgot the Australians and the fucking kangaroos and shit. So we see BTC USD. Okay, there we go. Yeah, I'm waiting for a pullback. I'm waiting for a pullback. I'm waiting for a pullback. I'm waiting for a pullback because I don't fucking care. So you see this where the fuck? Oh yeah, I'm expecting price to honestly. Okay, never mind. Yeah, it was rebalanced in this. Never mind. Because this was already rebalanced with this fair value gap, so it's manipulated at that point. The fuck is this? This is a forward gap? No. What in the fuck is that? That's not even like an auto block. When the fuck did I draw that? That is retarded. That's some retarded. That's some stupid shit. Anyway. The fuck is happening here? I won't take this. It's way too risky. Even if I take like this swing, like let's say a swing low, a swing high is like here, it's still not worth it. XAG USD. Whew. I missed it. It's okay. It's okay. It's okay. It's all good. Nothing. It's all good. I missed that trade, but it's all good. It's all good, man. See, this was manipulation of the distribution leg right after. Man, I should have taken that shit, man. But it's all good though. So you see this manipulation leg. You see this fair value gap being used. And then you see this price retest. You see this manipulation leg. So we see the distribution leg right after. D, give me that D. And then D's all the way towards this swingy. You know what I'm saying? So a short term high. So so you see this? So I'm expecting price. What the fuck just happened? But yeah, I'm expecting price to okay take it higher. On silver, bitch. It's Britney, bitch. Fuck you, bitch. This was already used. Oops, I did it again. I play with your heart. Got a lost in my head. Oh baby, baby. Oops, I think I'm in love. Da, da, da. Now we can fall freely. Now we can fall freely towards this point. Now we can fall and go. It's still gonna induce though. This candle is telling me that I'm gonna fucking induce you to eat your stop loss and then go down. Because it needs more inducement. So if I'm trying to take a trade, let's say I take this, I would target this. Because I need that to be my target. If I target this as my stop loss, I'm gonna get fucked in the ass. Fucked in the ass, literally. And I'm gonna take this all the way towards this, parallel to a swing low. So I'm gonna take it towards this fucking swing low. So it's like a 4.3 right here. Yep, 4.3. Because I'm not trying to risk it too much with the sweep. So, you fucking stupid. You stupid. You're ugly. You're you're stupid. But mom, he called me stupid. He called me stupid. That fucking guy. He called me stupid. Do you know how fucked up that is? Huh? Huh? It's fucking stupid. Alright. Anyways, I'm tweaking. But yeah, I'm expecting price manipulation at this range and then go higher. But that's besides the point, so. Waggy waggy. Nicky wiggy. Okay, that's gotta be race. Waggy waggy. Yeah, I mean at this point this trade's fucking gone, so kudos. But I'm still expecting a price retest here though. Man, get your ass out of here. But I still see that fair value gap. Man, I don't give a fuck if you see that fair value gap. You know what I'm saying? Yeah. See that? That shit right here. Where the fuck? Yeah, this is fucking fair value gap. So I'm expecting this to be, if it's respected, then yes, I will take this towards this. So I would expect a entry here. Target this as my stop loss, and then target this as my TP. You can still run it up. Run it up. Yes, sir. Run it up. The next 15 minutes, I will entry off this fair value gap. Not off this though. I'm still expecting inducement to fuck me in the ass. Look, on the 4 hour, you can see that this inducement is trying to fuck me in the ass. Sorry. So yeah, I'm expecting price to take that D. You feel me? Yes, sir. So this is such slow price action. I kind of want to get out, but nah, it's okay. So London session's about to close, so it makes sense. We check this low, so. Wakey, wakey, it's time for school. Get up, bitch. It's time for school, bitch. Get the fuck up. My bad. I just tweak like that sometimes. Get the fuck up, bitch. Stupid beat. Fuck you talking about? Get your ass in there. Wait. We gon' get right school, feel me? Playboy Cardi be like. Alright, so you can see this shit right here. So we can obviously take this towards the buy side liquidity draw. So, oh, man, what a day to be alive. I just wanna kill some people, cause it's just my time, you feel me? But yeah, anyways, I'm just tweaking. See this right here? This is why I just be geeky. I'll say, sir. You feel me? Let me up, bro. Let me up. You feel me? Hey, bro, where the fuck is this child headed towards? What in the good God's glory is this fucking mess? Jesus Christ. There's a fucking... What the fuck is this, bro? Okay, it's tweaked into fucking disregarding that stupid fair value gap. But it was nice until this point. It's just fucking weak start to fuck it in the ass. Look, I'm still expecting a fair value gap pullback though. Even though this was like retracing, like I'm expecting like a price retest somewhere here. This unmitigated fair value gap, so I'm expecting this to be retested. And then like bounce off the dick. My bad. So I'm expecting price retest and a pullback towards this fair value gap if it forms a fair value gap here. See how this plays out though. Ideally I wouldn't want to entry here because this would be so much higher risk to reward from here all the way to this, because it's gonna bounce off the titties and then give me a much higher RR trade. So yeah, I'll wait for this fucking thing. I'll wait for you. I'll wait for you. I will 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 wait for you. Can't get mad at myself cause you can't leave me alone. I'll stop and face you and what we don't. What you gotta tell me that. I should just target the closest shot term, or short term no. Anyways guys, that was a good stream.
All liquidity
Watch this video and finish things off for today.
and direction.
I'm gonna study all of his order flow. This is golden right here. If you guys are watching this, make sure you study his this right here, man. Fire. Not even kidding. This is fire. These notes are fire. Like literally heat. I'm not even kidding. This is some fucking fire. Like if you think about it, Ajo gives the best value. I'm not even joking. See, liquidity sweep versus run. So sweep is basically a temporary. What the fuck is that? That's the ugliest sweep in the world. Ew. Brother, ew. What the fuck is that? Brother, ew. See this? Sweep, and then we have a fucking distribution right after. Accumulation, manipulation, distribution. Power of 3. Bitch. Power of 3, bitch. Fuck you. Alright. Do you see this? Accumulation, manipulation, distribution, like right after you see the fair value gap balances price out. Manipulation, right after we have a distribution. Power of 3, bitch. Okay, that's power of 1, but power of 3. Accumulation, manipulation, distribution. AMD. Manipulation is nothing. Accumulation is just, you don't even need to mine accumulation. It's more of like a up and down, maybe a ranging market. It doesn't really fucking matter. But manipulation is just a sweep, a liquidity sweep. It's a reversal. Basically, be aware of inducements, because the way you're going to be aware of inducements is by looking at what's going on the 4 hours. If the 4 hour doesn't seem like, let's say for example, it sweeps liquidity, you know, the wick. Like obviously, like the wick is what sweeps liquidity, right? Who the fuck would be sweeping liquidity with a candle body, right? That's common sense. So, if the wick, right? If the wick, like if it's not going, like let's say in a bearish scenario, if it doesn't sweep the liquidity and then go downwards, if there's no momentum downwards and instead there's momentum towards the upside on the higher time frame, that means it's not a liquidity sweep, it's rather an inducement trap. Now, an inducement trap is when smart money wants more liquidity to be added into the market. So anyone who is seeing the liquidity or the manipulation will be like, hey, this is a manipulation, so let me just entry for a trade, right? The next thing you know, your manipulation, even though you are a smart money concept trader, you get manipulated because the smart money needs more liquidity to be added to the market, even your fucking stop loss. So they push price even like to your stop loss basically, so that further from your stop loss to collect more liquidity and then go lower. So unless you see displacement, proper displacement in a bearish scenario, unless you see proper displacement towards the downside, you don't want to entry, because the manipulation wick is not really a manipulation wick. It's rather a fake out. It's a fake out 2.0 basically. The first fake out is for obviously retail traders, support and resistance breakout traders, and the second one is for smart money traders who think manipulation and the distribution right after. It's not the reality. You wait for a proper manipulation. The proper manipulation is basically an inducement zone. Now, an inducement zone can be identified on a higher time frame. If it's not going in the direction that it's supposed to be going, don't entry there, because it's faking you out. Sometimes you can see this on a higher time frame, because if the candle at least turns like bullish while it's not supposed to be turning bullish, don't fucking entry, because that's like little traps, inducement traps. And if you want to see where people are, majority of the people, just draw like support and resistance lines across the fucking 15-minute chart. You'll see a bunch of retail traders just sitting there with their little stop losses, so just waiting to get triggered. Like, trend line liquidity and any type of trend line liquidity, and equal highs, equal lows, fucking bullish trend line liquidity, bearish trend line liquidity, all of them support and resistance lines across them. You see a bunch of retail traders waiting to get their stop losses hit. Like, you're losing money at that point. You know what's fucking sad? A lot of people still subscribe for like retail concepts just to lose money. Like, bro, you're paying money to lose money. Like, what? It's like the biggest scam in the world, because anything that's not like fucking retail trading is like free out there. But you're subscribing, you're paying people to teach you retail concepts. What kind of bullshit is that? And there's fucking other people literally doing it for free that don't teach you retail concepts. retail concepts are like the worst kind of thing. Support and resistance is what smart money wants, because smart money needs liquidity. But smart money is also getting smarter, so they need people who identify inducement 2.0. Inducement 2.0 is people who can see a higher time frame bias and identify if it's supposed to be displacing in this direction that it's supposed to be displacing, or if it's a manipulation fake out. A manipulation fake out is basically a fake liquidity sweep. So it's basically the same thing as trapping a smart money trader. So yeah, so it's a turtle soup 2.0. So yeah, that's pretty much it. So the inducement zone, as some people call it, because there's a lot of fucking smart money traders getting their stop losses triggered because they just didn't follow it. So that is something that I faced, and that's why I'm like telling you guys, because it's like something that I fucking lost my trades to. And like I was like, you know what? Let me just try to identify why the fuck this is happening. On the higher time frame, I see this exactly happening. Like I don't know how to explain it. It's fucking stupid.
leads you to
But again, smart money needs liquidity in the market, obviously. Like, who the fuck doesn't need more money in the market? So, for as much as they can trigger the fucking stop losses, they will trigger it. So, look at this. If you look at this, for example, you see this doji candle. I fucking hate this doji. Oh, never mind. I thought that was doji candle. But you see, there's a manipulation like right here. So, if we see a next candle which is bullish in this scenario, because we're trying to take this trade bullish, if we see that, then we have confirmation that this is in fact a manipulation and rather not a fake out. Okay, so yeah, that's pretty simple, but it is pretty time consuming. But the thing about trading is it takes a lot of time. That's just the reality. Sometimes you won't have any trades, so you got to make sure you're like very mindful with the type of trades you take, and very you shouldn't rush into trades just because you didn't find trades, because there's always opportunity. It's like you shouldn't rush into things, because like you wait for something nice to happen, and then you see it, but then you take the wrong thing, so now you've lost money instead of making money because you are impulsive with your decision, because now you waited for too long for a trade to set up. So that's just how trading works. So you can sort of be patient. As much patience is like one of the important things in this. Like, unless you're very like dedicated into this, you can't like make this like a job where you can like fucking get in and get out of the market. Scalping is one of the most dangerous things you can do, because there's no risk management there whatsoever. You're just like gambling, dude. Just fucking gambling. You see a fucking trade and you just gamble. That's literally everything you do. So I know it's fucking weird. Anyways, besides the point, right? So see this manipulation, and we see distribution like right after. So this is fair value gap, manipulation, distribution like right after. So yeah, it's fucking weird. So you see the short turn over here. No, not really a short turn. What am I saying? Well, this is the fair value area, but you can see in this scenario, obviously, like the price doesn't really want to go lower because there's a high time frame bias that the price should be going bearish, right? So maybe we reached a high time frame, or even a swing point, past the swing point. So that's why we're going lower, because we can't really push higher. So you should just consider that too. This is because it's the high time frame swing alignment. So if you're sweeping liquidity right here, then why the fuck would you be continuing higher? You know what I'm saying? This is just a sweep, manipulation week, distribution right after. It's pretty fucking easy. This is like so easy after you get it. It wasn't this easy. Like, I started in February. I'm so fucking like, I'm decent now. So and it's the fair value areas. Fair value areas at the bottom, 1 to 3. It's like a 1 to 3 swing. So it's like a 1, 2, and 3. It's like a vagina. Okay, maybe not like that, but you get the point. So oh man. Time. Let's see what this fucking PDF is. This session is basically session volatility. Works factory for right here. This is for tomorrow though. Yeah, this is for tomorrow. Right here. I only have red folder and orange folder news. Red is like what you should consider. What the fuck is this? Oh hell no. I have the actual slide of this So that's good. I have it somewhere here. So shout out to Dinet for dealing with my shit. So W Dinet. Exactly. This is the NFP, FOMC, CPI. Yeah, CPI. There's one more. That's CPI or something best. Right, for the news that you should avoid. When it's like in slides, nice slides like this, it's so easy to like shit. So easy. So easy. Context. Why do you have context here? Sorry. My headset just keeps doing that, but it's okay. We're not gonna be playing audio anyway. Favorite areas. Yeah, favorite areas is pretty easy. First line of defense, overlap in defenses, and that's it. Swing points, obviously. Favorite gap. The last line of defense, my bad. First line of defense, overlap in defense, and then last line of defense. All three combined is the best case scenario. But if you don't have first line of defense is nothing but a favorite gap. Okay. Last line of defense is nothing but a fucking swing point, right? Swing high or swing low if you flip it around. And the overlap in defense is basically the sweep, or if you can consider like a, how do I explain this? Like a break of structure combination, like a structural rebalance basically. So narrative, fair value gaps, fair value areas. Yeah, fair value gaps is pretty simple. It's just imbalance in price. On a 15-minute fair value gap is but nothing but a bunch of displacement on the 5 minutes. So ejection third candle. So yeah, so this is very little strength. I should consider this. This is such little strength. This is a rejection candle. Yeah, this scenario I wouldn't trade. This is a bad scenario because it's a likelihood for price to retrace, but this is also because it's a higher time, like another PD area, like a swing point at this range, like a, you know, buy side liquidity swing point parallel. So obviously it would be sweeping and then going lower, right? So it's basically a sharp turn. So you know the whole concept of order blocks at supply and demand. So supply demand, let's say. See, this is valid. Manipulation, distribution higher. Displacement. This is extremely bullish, but it could sweep, it could even go lower. But unlikely though. It might, if it has such good displacement, then it's gonna probably use this as a retracement and then go lower, higher. See, manipulation weight, distribution higher. It's fucking easy. Swing point, fair value gap, fair value area, 1, 2, 3, FVA. The fuck was that? Last line of defense, first line of defense, and overlap in defense. Overlap in defense, first line of defense is nothing but a fair value gap. Last line of defense. In this scenario, because there's no fair value gap, this is the overlap in defense. So in this scenario, I wouldn't really consider this as like a fair value area necessarily. That's it on my nose. That just fucking hurts. Ow. I put this in a folder. Yeah, I mean, time is fractal. Simple. Order flow is nothing but candle science. Yes, that's right. Yeah, so if it weekly, bullish, weekly or slash this is a bold claim, but you know what I'm saying. It's a bold claim because I can't really like depend exactly on that fucking point either. But so yeah, it's pretty much as of right now. basically in the middle of two. Any short-term high or lows is basically on a higher time frame is basically inter-term high or the lower time frame. It's pretty simple. If you look at any, yeah. Alright, basically, you can see that this any short-term high on the high time frame, let's say for example daily, this is a inter-term high or inter-term low on the lower time frames. For example, this short-term high. If I just mark this, right? If I just mark this, let's see over here, this is an inter-term high right here on the 4 hour, coming from the daily towards the 4 hour. It's pretty fucking simple. It's pretty straightforward and simple. So manipulation wick and distribution wick right after. See, this is the accumulation, manipulation, distribution. We have this fair value gap, high probability fair value gap, sharp turn, right? Use this. This is the supply level order block, and you basically tap into this fair value gap, and then you go lower. So it's pretty fucking simple. Pretty fucking simple, man. It's so easy. I'm not even kidding. Like, this is the easiest crap ever. Where's order flow? This is the easiest crap in the world. Market structure shift, market structure and fair value area. Let me see. Market structure. It's pretty easy. Fair value area. So it's a swing points. 1 to 3 FVA. 1 to 3 FVA. 3 swing movement. Simple. Just remember it as like 1 to 3 FVA. It's pretty fucking simple. 1 to 3 FVA. Simple. Man, this is like so fucking easy now. It's like, you know, in the span of like a few months, we managed to do this shit. I'm surprised. Honestly, I'm not surprised. Broski, I fucking put in so much fucking time into this bullshit. If I'm fucking dog shit at this after putting in so much effort, there's something wrong. There's something wrong. Money making concepts. You know what's ironic? This is the only thing in my life that I was not told to do. As in, like, not told to do, but like not specifically encouraged to do. You know what I'm saying? And this is like the one thing that I did the best. Like the best. I don't know. I went above and beyond for it because I'm interested in this. It's not about, like, you know, fair the area. You need to understand market structure and order flow first. Exactly. Just trade from, not trade towards, yeah. Fair value area. Yeah, so fair value area is basically creating order flow, right? That's the whole point. So obviously fair value area will be used as a validation of a breaker structure. So breaker structure, you have an imbalance circle right after. If it balances the leg right after by pulling back and then using a fair value gap in the order flow leg, boom, you have confidence in the fact that it's gonna keep going higher, breaking structure towards the upside. Keep repeating that order flow pattern until some point it reverses, sharp turns, simple, at a swing point basically. So the whole concept of liquidity after a sweep. So you have a reversal, sharp turn. Supply and demand. Supply and demand. Anyways, guys, that's pretty much. Shout out to Arjo. This was the best. He is the best teacher. Like, he literally taught all this crap for free. This is some golden content. I'm not even kidding. I'm not even paid to say this shit. Like, he does it for free. I'm not even like fucking promoting a person, a random fucking guy's fucking, you know, because this is free. Arjo, MMC. I will keep this for the rest of my life. Peace. Let's go. Oh, man. Man. I'm gonna watch this. Refine my edge to the market, and then edge to the market, obviously. Okay, so it was fun. The learning won't stop, but the money making concept ends here. I need to focus a bit on dropshipping as well nowadays, because now I've came to a good spot in trading, so I need to like keep some time for dropshipping as well. Obviously not fall off, but you get the point. So, oh fuck, I thought I just hold it.
Understanding of.
She get it from mama. I'm gonna say that's fucking right. Except I'm not a she. Fuck you for assuming my gender, bitch. You fuck you. I have cooties. Do you want some cooties?
Overall thing, the bias. So then how
Yep.
hundreds of PD rates we're going to deliver there, and that is exactly where we then. So that starts with, we need to know what a top-down analysis is actually for. What's the purpose? The purpose is to find a draw on liquidity, and once we find that draw on liquidity, we need to find our narrative, that is the PD rate, on how we're going to deliver there, and that is exactly where we then want to look for our entry pattern. So what did I find our narrative, that is the PD rate, on how we're going to deliver there, and that is exactly where we then want to look for our entry pattern. And that is exactly where we then want to look for our entry pattern. So what did I mention first? The first thing I mentioned was finding the draw on liquidity. So what is the draw on liquidity? The draw on liquidity is a target. So what then actually is a target? In price, we have multiple PD rates. Well, nowadays we have millions of PD rates, but I'm sticking to these PD rates that you see right here, which is mitigation block, breaker block, order block, fair value gap.
Previous daily candles, highs, all those is also something that I know he mentioned, just like previous candle, but still, like previous daily candles, highs and lows is also important.
Swing high.
Session timing. Look, Thunder took out the highs, so obviously this is take out lows. They will shift structure at some point, so after this fair value gap on my entry, consider the markets are shift right after. Sorry, oh. No, I would wait for this to be retested, because there's a much higher trade sitting here. I'll put this to the side just to not avoid confusion.
Swing low, swing points, and we have previous candle high and previous candle low. Those are all the PD rates that I use in my chart. Gives me a lot more accuracy if we don't have our chart clustered with all hundreds of PD rates. So a target is a PD rate. And why a PD rate? Because price is always moving towards a PD rate.
I'm trying to play a bit of Fortnite with TZ. My bad. Let's call your boy TZ. See if he's down to play a bit of Fortnite. Yes, sir. Yes, sir. Alright, let's call him and see.
It is our job as traders to find out towards which PD rate we are moving next. And if we can find out towards which PD rate we can move next,
Yo, you down to play a bit of Fortnite? Ha 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 ha. You down to play a bit of Fortnite, little boy? Huh?
Nah.
What?
Nah, but bro, I don't have internet, remember?
Oh, right. My bad.
that is
Man. Do you have internet
If
after midnight?
Hmm?
Do you have internet
That
after
also
midnight?
that draw liquidity and
This,
direction.
this
leads to
thing doesn't
understanding
work when you don't have internet.
So then the direction.
Wait.
The unlimited thing doesn't work when you don't have internet.
Oh, really?
Yep.
Can you put like half a GB or some shit? Like 500 MB? I'm gonna wire you like fucking 200 rupees or some shit. You put like half a GB or some
You
shit.
can't put half as bro, I don't wanna put half a GB.
What's the fucking minimum?
The minimum is 1 GB, but I don't wanna put 1 GB.
What is
I don't Wi-Fi right now anyways.
Man, you boring as hell, man. Fuck you. Fuck you. Who?
I just have enough data to get around, WhatsApp and shit.
And how are we gonna do dropshipping though? Oh wait, we have to wait until next month, right? At that point?
It's like a day. It's like 1.5 days, I think.
1.5 days is like 10 years.
It's not 10 years, bro.
It is 10 years, bro. Like, man,
Candles want to do. I need to
1.5 days, bro. That's 1.5 years in my dog years. Like, I don't know how dogs operate, but anyways, like, yeah, 1.5 days, bro. That's just gonna be like a Sahara desert road trip. Anyways, that's all good. It's fine. I'm gonna just like call you after I'm done. Basically, I'm streaming right now because
Bet.
yeah. Bye bye. Good night, man. Oh
to know what the next monthly candle wants to potentially do. So in order for me to know that, I need to be more focused on the most recent price action. So if you are looking to be a position trader and you want to be a monthly time frame trader right here, that's perfectly fine. You can do that. Then all you need to do is use market structure and concepts a little bit different on the different time frames as well. But the overall premise of this top-down analysis stays the exact same. So in order for me as a scalper, day trader, swing trader to find that draw liquidity, I want to focus on what the most recent candle can do. So ideally, the current candle that's forming and the next candle after this candle closes. So what I like to refer to is a concept called candle signs. And candle signs is where you look at the previous candle to know what the next candle might actually want to do. Now, if you struggle with finding a draw liquidity, my advice would be to mark out all the PD rays that I just mentioned and seeing how candle science right there is respecting or disrespecting those PD rates. So right here, we have this monthly fair value gap right there, which we are coming into with an up candle. Now I see right there that we are respecting that monthly value gap. Let's remind ourselves again what that candle science is. Candle science is where we have a respect candle and we have a disrespect candle. A bearish respect candle is where we have a long wick at the top. That indicates that we are respecting something. Because this long wick right there indicates that we are having lower time frame fair value gaps actually continue lower. Where if we have a disrespect that we are respecting something, because this long wick right there indicates that we are having lower time frame fair value gaps actually continue lower. Where if we have a disrespect candle, for example, we can see we don't have a long wick at the top and we don't have a long wick at the bottom. This indicates that this overall move just had bullish fair value gaps. Where the next candle right there creates bearish fair value gaps on the lower time frame, already seen just by looking at the monthly time frame alone. When we are running into a premium array and we are respecting it with a respect candle like that, the next highest probability thing for price action to do is to create a down candle after that. And then what can the down candle actually aim for? Well, what are we always aiming for? What are we always targeting? A PD rate. So again, what are all the PD rates that we have right there? Let's mark them out. We have this previous candle high, previous month high. We have this previous candle low right there, so previous month low. We have this swing low right there, and we have this swing high. So what is more logical right now for price to actually aim for right here? Well, we are respecting this fair value gap, which is a premium rate. We are now seeing a long wick at the top right there, so that's already fair value gaps continue lower. So right here, are we aiming for the next premium rate or the next discount rate? Well, this is where my arguments concept comes in. And the arguments concept is the following. Imagine that you are looking at an argument from the outside, and on the left side you have the bullish person, and on the right side you have the bearish person. Those two people are arguing what price will actually do next. Which argument is stronger, from the bullish person or the bearish person? And the person that has the stronger argument is the person that will win the argument, which will lead to our understanding of where price will actually most likely head towards next. That is reading the probabilities. In price, in trading, every single little thing is about probabilities. It's not about guesswork. So right here, let's imagine those two people. First, the bearish person starts right there. Well, we have created a bearish fair value gap right there, which we are currently coming into. And as we are coming into that, we are failing to create a new fair value gap higher right there. Because we traded back into that first candle right there. This is now a respect candle, indicating that we have fair value gaps on the lower time frame to continue lower off of, to now target that previous month low at least, and potentially target even lower right there. And the bullish person says, well, my counter argument right here is that we have two up candles. Okay, well, thank you for your argument. It's completely useless though. So right here, which one do you think, objectively speaking, is a higher probability? Decide right now.
It's month liquidity target. PML. I was like trying to figure out what PML means. Let me just take a screenshot of this.
I would argue lower prices. That's all we currently have going for us. And this is why it's so important to start on the monthly, because the monthly time frame is the strongest time frame. So if we understand the next monthly candle, we understand a lot of 1 minute candles as well. So based on that argument, what then becomes the most likely draw on liquidity? This previous candle low right there. Now, once we reach that previous candle low, we can now aim for potentially the next discount array, which is sitting right there. If we're bearish, we are simply aiming for constantly the next
Give me a break.
Next discount array that we see on the chart. So the next discount rate in this case is that swing low. So right here we have somewhat of an understanding of what the next draw on liquidity might be. Do we have right here a narrative? All right, what then is a narrative? Well, a narrative is when we understand the draw on liquidity and we understand the direction, we overall understand the bias. And the bias is a certain direction. Will we continue lower? Will we continue higher? And what target are we reaching for? Well, that target right there, the draw on liquidity, we will push lower towards that by narrative. So the narrative is if we are going lower, where are we going lower from? In other words, the narrative is the PD array that will deliver us towards the draw on liquidity, that will get us there. And the narrative is where I want to look for fair value gaps. So all I want to do right now is I want to go from the monthly to the weekly right now. Because on the monthly, we do not have a fair value gap that can push us lower currently, where we can actually look for an entry right now. We've already traded into that one. That one is not relevant anymore. So let's drop into the weekly. And the weekly right here, do we currently have a fair value gap that we can continue lower from? No. Is it in the making? Yes, it is. So potentially, after this weekly candle closes right there, could be interesting next week. But that is only the case if this candle right now will be a consolidation and will stay right there and will not already expand lower. How can we know that? By going again into the daily right now to find what we have on the daily time frame. And before we do that, what I like to do is if the monthly draw on liquidity right there is quite far, that can still be a draw on liquidity, of course. But if we have any other discount array sitting right here in form of that fair value gap, for example, and this previous week low, then I like to use those as closer discount arrays. The reason for that is because, of course, the lower you expect price to go, the lower probability, essentially. Where price, it is quite easy for it to reach those closer PD rates. So it's almost guaranteed that either this week we will trade into that previous week low, or next week we will trade into that fair value gap right there. It's almost guaranteed. And the further the PD array is that is our draw on liquidity, the lower probability it actually is. And we can now look at, all right, well, we have this draw on liquidity. If we want to push lower right there, how can we actually deliver there? So which premium array will be responsible for pushing into that discount array right there? Where, let's look at the daily time frame, and I'm going to remove the weekly value gap. We already have this daily fair value gap sitting right there, which we could potentially continue lower from. And if we zoom in a little bit, again, look at those daily candles, then what do we actually see? We see that we have this candle, the Monday right there, coming into the daily value already. Seems like it was respecting it a little bit. Look at those daily candles, then what do we actually see? We see that we have this candle, the Monday right there, coming into the daily value already. Seems like it was respecting it a little bit. Why is that not holding? Exactly what we're going to go over as well. Then we have this Tuesday right there, huge wick at the top. So what is the most likely thing for this next candle that is currently forming to do? It is most likely going to reach this previous candle low. Again, I can be completely wrong. All I'm doing right there is, again, stacking up the arguments. What is the bearish person saying right here? It is arguing that we have fair value gaps right there, that we are taking our lows. The monthly is even bearish. We have those daily value gaps. We are respecting those daily value gaps seen through candle signs right there, a long wick at the top, where the bullish person is having a counter argument. And that counter argument is, well, I have 3 bullish candles and I'm not creating a fair value gap. Okay, well, again, then it becomes quite obvious that the higher probability thing for price to do is to continue lower, at least towards that previous candle low right there. Will that happen guaranteed? No, because there's still a probability right there that we might want to continue higher. But I don't want to guess. I want the probabilities on my side in trading. And that leads to overall becoming a profitable trader. So this is the first discount rate that we can reach for. After that is that previous week low that we had, which is also a daily swing low right there. But now it's also quite important to understand which is, so this is the first discount rate that we can reach for. After that is that previous week low that we had, which is also a daily swing low right there. But now it's also quite important to understand which day can actually be responsible for us to push lower, to continue lower. And that is where we need to understand volatility, which is also known as time. We need to trade at the right time in the market. If we want to know if a day itself will be volatile enough for price to push lower and to actually continue lower off of that, then here, if we're looking at the dollar, DXY, the US dollar, then we want to look at US dollar red folder news. Where if we look at this week and we dissect it again by looking at the candles, then we see Monday is already coming into that daily value gap, having sort of rejection, but it's not getting respected on the next candle. Why is that? Monday didn't have volatility in that day. Monday didn't have red folder news, and red folder news brings that energy to the market. If the market wants to move, then it needs energy. Just like if we want to move, we also need energy. In order for me to sit here and to move, I need some kind of energy, right? I can't just be completely empty, no energy, and then try to move. Not going to work. It's the same for the market. So in order for the market to make this push lower, it needs energy in the form of that red folder news. When we are looking right here, if the day actually wants to continue lower. So that's why that rejection is not that relevant. The rejection is relevant when you have the day and the rejection day right there on a day that actually has news supporting the ID. Red folder news right there to continue lower off of that. That is the relevant part. And on this day, we had red folder news. And on Wednesday, red folder news as well for the US dollar. Same for Thursday and Friday as well. So now we have the volatility supporting the ID that we can actually continue lower as well. But this is also where it now gets extremely tricky. If you follow the same schedule from the monthly down to the weekly to the daily, and you do not find a clear direction, you do not find a clear narrative, which in order for you to get a narrative, you first need to have a clear direction. If you do not find that, then at the daily is the cutoff. That is where you stop. You do not want to go into the 4-hour and only trade off the 4-hour ID. Again, if you are just starting out, that would be my advice. Eventually, I can make a separate video on that as well, where you could potentially eventually look into that. But the highest probability is always going to be where you have the monthly, the weekly, and ideally the daily supporting the ID. But a minimum of the daily supporting the ID. If you do not have the daily, nor the weekly, nor the monthly supporting ID, that's not enough for me. So here we have monthly, weekly, and daily direction. So the drawn liquidity supporting ID, where we're quite confident about the drawn liquidity. And we have a daily narrative. So in that daily narrative right now, that is where you can go into the 4-hour right here to look at 4-hour, same exact thing. But the 4-hour, if we mark out every PD rate, we have again this fair value gap, which we might continue lower off of. This becomes the swing low sitting right there, where if we now want to continue lower, then this premium rate or a new premium rate after that as well, new 4-hour flag lower, could be very, very nice to continue lower off of as well. And this is where you are also allowed to go into the 1 hour, to go into the 50 minutes. So if we do that, then of course, now we are reaching the idea of scalping, where if you keep on doing this, you are going to be a scalper. If you want to be a day trader or a swing trader, you are going to stop at a certain time frame. So the type of trader you are, again, I can't fill it in for you. There's not one type of trader that is better than the other. It's whatever you resonate with, whatever fits your personality, whatever fits your overall lifestyle as well. So on which time frame you stop, that is also depending on which type of trader you want to be. Again, the PD rate we find right there is the PD rate once we reach that and we sting into that right there, that is exactly the PD rate that we now want to go into the lower time frame right there to look for an entry actually. So the narrative and the overall goal of the top-down analysis, like we mentioned, the goal is to find the PD rate that will push price lower or higher. And in that PD rate, that is the boundary for our entry pattern. So in that PD rate, once we reach that PD rate, we want to look in that PD rate again for our entry pattern, for our entry confirmation. That is the goal of a top-down analysis. Now, there's a reason why I start this video on the US dollar, because the dollar sets the tone. Where if the dollar is clear and we can see it's either moving higher or lower, in this case moving lower, then indices, for example, will most likely move higher as well. And the other forex pairs, for example, EU, GU, that have US dollar in the second part of the ticker name, those will move higher. And US dollar JY, US dollar Canadian dollar that have US
What?
higher or lower, in this case moving lower, then I start this video on the US dollar, because the dollar sets the tone. Where if the dollar is clear and we can see it's either moving higher or lower, in this case moving lower, then indices, for example, will most likely move higher. That's the tone. Where if the dollar is clear and we can see it's either moving higher or lower, in this case moving lower, then indices, for example, will most likely move higher as well. And the other forex pairs, for example, EU, GU.
From the dollar index, right? Yeah, I get it. So like from the dollar index, if it's going lower, indices will go up in value, and the let's say JPP USD, because it's against the US dollar, because US dollar is weaker at that point. If it go higher, if it's something the US dollar against something else, then it will be going lower because it's parallel to the dollar index.
EU that
could determine that from this bad boy right here. So
have US dollar in the second part of the ticker name, those will move.
That's exactly what he has over here.
Higher. And US dollar JPY, US dollar Canadian dollar that have US dollar in the first part of the ticker name, they will likely move lower again. So the analysis on the other instruments will become a lot
because the dollar is weaker.
Easier if we simply understand one single instrument in the form of the US dollar. Because heading into that instrument, into the indices, in S&P 500, for example, or EU, that makes it quite clear what they want to do as well. Now, of course, the dollar itself will not always be clear. So if the dollar is not clear to you, then what you would want to do is,
because when the price is lower of the dollar, there'll be much more like buying pressure as well. Because it's like a discount. It's like people are gonna think, oh, this is a discount price. So I mean, this, there's more demand for it. So this price,
you want to move on to the crosses.
So the value of the commodities go. Sorry, not commodities. Indexes go higher.
And the crosses are these right here. These are all the cross pairs. These are less directly linked. For example, Euro US dollar is directly inversely correlated with the US dollar as well.
Inversely, exactly, because Euro is fighting against the dollar. So when the dollar is going down in value, the Euro USD, like Euro's value, like strength is gonna go higher, so which means the Euro is gonna go higher in the overall chart, we can assume it's going to be bullish on average. So that's what he's saying.
Well, so it's moving the exact opposite of what the US dollar is doing. But Australian dollar, Canadian dollar is less dependent on what the dollar is actually currently doing.
Yeah, because it has nothing to do with it. I mean, it's less dependent because obviously there's something to do with all these pairs. Like, so in some way, the dollar is what controls the whole fucking world. That's obvious. But in some way, it's not directly related, correlated with each other. So whatever the news on the dollar is just like late news for something that doesn't really associate directly with the dollar. So if it's at AUD, CAD, it's like, is AUD stronger? Price goes higher. I mean, chart goes higher. If it is AUD weaker, chart goes lower. Simple.
Moment in time.
But it is, like I said, US dollar is the control of the world. So at some point, if the dollar is dumping like crazy, then fucking AUD will also go higher in value. So because essentially, no, if the dollar is dumping, fucking AUD will go. My brain hurts.
So what you would want to do for the crosses is you again want to focus on the crosses that have news supporting the ID throughout the week. So for example, you can see I currently only have GBP pairs right there on my potential interest list.
So if it's going to be directly affecting it.
And that is because we only have GBP and US dollar news supporting the ID trading this week. So I want to look at GBP crosses right there. If the dollar is not clear to me, if the dollar is clear, I want to simply look at the US dollar and trading the forex majors, EU, GU, and indices, etc. Now this is not all because
GBP USD, that's what it means by TU.
if the dollar GBP and US dollar news supporting the ID trading this week. So I want to look at
I bet he calls GBP AUD like DA or some shit.
GBP crosses right there. If the dollar is not clear to me, if the dollar is clear, I want to simply look at the US dollar and trading the forex majors, EU, GU, and the indices, etc. Now, this is not all, because now we're going to move on to an actual pair analysis and another indices analysis as well. But you do also understand on what you are supposed to do if the dollar is not clear. Because again, a top-down analysis is not always going to give you a clear direction and a clear narrative. But that's not the point. It's to find those pairs and instruments that do have a clear direction and a clear narrative. And that again leads back to the understanding of an argument. If we have that argument and both arguments of the market are pretty good or they're pretty bad, then that leads to a 50-50 argument. That leads to a 50-50 understanding of what price can actually do next. We don't want to be 50-50. We want to almost be 100% sure that the probabilities are on our side. Now, quickly going over the daily, then what do we see? We see the rejection. We are following through a little bit lower as well. But we do have a huge sweep of that previous day low, which I don't necessarily like. Again, the only real option right now is still to continue lower. It's not a confirmed sweep just yet, unless we start creating a bullish fair value right there. Then we argue, all right, we might actually want to continue higher. But right here, I would still want to look at lower prices as well. But ideally, I personally would want to wait until we again have new fair value going below that low, below this low right there. That indicates for me that we are getting comfortable below that low. So we're not actually sweeping it. We are not trapping that liquidity because then people are allowed to get out of their position, etc. So we can confidently move lower as well. That's exactly what I'll be looking at. That would be the ideal scenario. Now, looking at Australian dollar, US dollar right here. Again, same premise. We have this monthly fair value gap right there. We are currently respecting that by this candle that we see right there. What can the next candle potentially do? Well, it again fails to create this bearish fair value gap right there that was in the making at that moment in time. Because if we close below that low, we would have created a bearish fair value gap, which would have been another bearish argument. But now we take away that argument by moving higher and by not creating that fair value gap. Perfect. So if we want to continue higher, we have already taken the previous month high. We can now look at that swing high. That's the next premium array. See how much easier that is because
Inside.
because again, I'm doing that quite fast because I already understand what the dollar is most likely going to do. Where Australian dollar, US dollar, if the dollar going lower, then Australian dollar, US dollar is most likely going higher.
Inversely colored, that's why. Directly impacts. So if it's something USD AUD, then USD will be going lower. It's pretty simple. I'm just trying to like, get this one time in my head.
Now, I also need you to understand that not every pair will be as clean as the other pair. Meaning Australian dollar, US dollar might be a little bit more clean, might be nicer price action than New Zealand dollar, US dollar, for example. So that is where you again go over the arguments in those different pairs. Now, moving on to the weekly right here, going over it a little bit faster. Then we
So if you do analysis on the US dollar index, you can like identify that with like the rest of the pairs that have direct correlation with the dollar. So
see, do we have a weekly value gap currently to push higher from? No. Okay, so we can move into the daily. But before we do that, let's look at some premium arrays right here. Previous candle high, previous week high. We have a weekly fair value gap sitting right there as well. Now, if we want to continue higher, then what can we continue higher from? The narrative is look at the daily time frame. On the daily, we have this fair value.
oh my fucking, let's look at it right here.
Now, if we want to continue higher, then what can we continue higher from? The narrative is look at the daily time frame. On the daily, we have this fair value gap right there. And
Sorry, mitigated.
we have this mitigation block, which I also like to call a fair value area right there, which we can push higher from. We have news supporting ID on that Tuesday. So that is a confident low. That's a strong low right there. If we now want to look at higher prices again, then what should we do? Go into the 4-hour right here to find now a new fair value gap, which we can actually look to continue higher from. 4-hour, no fair value gap yet. Could be created later on. What is that? Later on this Wednesday, whilst I'm recording it. But on the 1 hour, what we saw is we already have again. Then
Interesting. So basically, right. This is like a different perspective now that I think about it. It manipulated this distribution right after. Distribution right after. AMD right here. Ain't talking GPU. Because there's no counter argument at this point until the swing high. Like let's ignore this noise. This is already mitigated anyway. So like there's no other argument at this point except for this swing high. So it's gonna safely go and hit that.
what should we do? Go into the 4 hour right here to find now a new fair value gap which we can actually look to continue higher from. 4 hour.
This has been used over here. This has been used over here. This is mitigated by the point this has been used. This is unmitigated, so now it taps into this, manipulates this, and goes higher. Manipulation, distribution.
No fair value gap just yet. Could be created later on. What is that? Later on this Wednesday, whilst I'm recording it. But on the 1 hour, what we saw is we already had fair value gaps right there, scoring ID to continue higher off of that as well. And we are leaving behind new 1 hour fair value gaps as well. Perfect. Off of those fair value gaps, off of the new 4 hour value higher off of that as well. And we are leaving behind new 1 hour.
Yeah, so we have the fair value gap, and then we have the manipulation, and we have the distribution like right after.
Or fair value gaps as well. Perfect. Off of those fair value gaps, off of the
So I'm expecting pull back here, then go higher.
new 4 hour value gap that could be created, off of a new 1 hour value gap that could also be created, we can then look at our entry. That is where you want to combine those time frames right now. So if I'm looking at a 4 hour fair value gap, which I want to see high prices from, then what I would want to do, if for example this 4 hour value gap that's created high right there and we trade back into that, I would want to look at 5 minutes entry confirmation. After this video, you can look at other videos that I created where I fully go over the entry confirmations. For example, market mastery, full market maker model guide. That's where I go over almost everything. That's in perfect alignment with this as well. And those fair value gaps is where we can look for entry to then target again the targets, the drawn liquidity that we had right there at the top. If we take a look at the indices, it's the exact same thing. If we take a look at the indices right
If you have the biggest balls in the world, you can also target like the highest drawn liquidity. That will get you like a 1 to 25 ratio type of trade. But that would take a while to hit though. It's probably going to take like a few weeks to hit. But you're going to get like a 1 to 25 high probability trade. So that's like, you put $100, you make like what? Times 25. But it's going to take a few weeks to hit though. $100. Like, it's like 2,500 just from like $100.
there, it's the exact same
So you're risking 100 for like 2,500. It's going to take like 2 weeks to hit. So
thing. And again, you can combine these
free money at that point. So
time frames as crazy as you want to, and you can make it as crazy as you want to as well. Because if we look at the monthly right here, we're just constantly moving higher. All right, I would argue the monthly right here, we're at all-time highs. We don't really have a clear drawn liquidity on the monthly just yet. So let's move to the weekly. Do we have something on the weekly? Well, if we are in desperation, then we can always mark out previous candle highs and previous candle lows right there to potentially get an idea of what it wants to do. But I would argue the weekly right here is also, you can always mark out previous candle highs and previous candle lows right there to potentially get an idea of what it wants to do. But I would argue the weekly right here is also not super clear. If you're struggling with the top down
previous candle high, yeah, that's right. Previous candle high of daily, the weekly and the daily, weekly and daily, weekly, monthly, monthly, weekly, and daily, monthly, daily.
as I can see why this right here would be a struggle in the beginning. Now, if we move on to the daily, and on the daily right here, we are not creating a new fair value higher right there. So overall, at this moment in time, I would argue, well, that's a little bit tricky. What do we want to do? Do we want to continue higher? Do we want to continue lower right there? I'm not too certain right here. But
because yeah, price has been rebalanced over here, and over here overall we have a manipulation, we have a distribution right after. So this has taken this out, so we have a manipulation. So this is a very tricky situation.
after we create a candle like this, it already becomes
So it has been a distribution like so far.
a little bit more clear because now we are respecting a previous candle low, and that is again a discount rate right there. So if we want to continue higher, then where can we actually continue higher from? And this is where we need to understand as well. What I'm currently doing is an example which I said, if you don't have daily narrative, you want to cut it out there, you want to stop it. If you're a scalper, for example, only trading the 1 minute time frame, then this is where you can still follow through. Because right here on the 4 hour, what are we seeing? We have a 4 hour order block to the left right there. After that, more importantly, we are creating 4 hour values higher as well, sitting right there, which we can continue higher from, and which we do. But eventually, this whole understanding, moving on to the 1 hour right there, 1 hour value, 1 hour order block, moving even on to the 15 minutes right there, then moving on to the 5 minutes to the 1 minute, you can again see how that then leads to eventually
Fractal.
a 1 minute trade.
Time is fractal.
To eventually
Simple.
solve. So let's zoom out a bit right here on the 4 hour. If we now go to current price action, what can we actually reach for? Well, if we take a look at the daily candle close really quick based on candle signs, we see a huge up candle. That's again a disrespect candle. So what can we reach for? Well, this previous candle high, most likely, and this swing high in the form again of that. Again, if we now go to current price action, what can we actually reach for? Well, if we take a look at the daily candle close really quick based on candle signs, we see a huge up candle. That's again a disrespect candle. So what can we reach for? Well, this previous candle high most likely, and this swing high in form again of that premium array as well. So now we need to find a fair value gap ideally, or any discount rate which we can continue higher from. On the 4 hour, do we have anything at this moment in time? We have that as well. So now we need to find a fair value gap ideally. This previous candle high most likely, and this swing high, a huge up candle. That's again a disrespect candle. So what can we reach for? Well, this previous candle high most likely, and this, we see a huge up right here on the 4 hour. If we now go to current price action, what can we actually reach for? To eventually a 1 minute trade, to eventually a skull. So let's zoom out a bit right here. Then moving on to the 5 minute, to the 1 minute, you can again see how that then leads to eventually a 1 minute trade, to eventually a skull. So let's zoom out a bit right here on the 4 hour. If we now go to current price action, what can we actually reach for? Well, if we take a look at
That was
daily
right,
candles really quick based on candle signs, we see a huge up candle. That's again a disrespect candle. So what can we reach for? Well, this previous candle high most likely, and this swing high in form again of that premium array as well. So now we need to find a fair value gap ideally, or any discount rate which we can continue higher from. On the 4 hour, do we have
After a
any
balance of that huge fair value gap, you can like expect to go higher from there. Like it needs to balance price obviously a little bit, so I would ideally look for like in the 4 hour, especially in that context daily candle, the daily one fair value gap on the 4 hour, you can expect this price to like balance this fair value gap, manipulate this, have a fair value gap manipulation, and then go higher towards this draw.
anything at this moment in time? We have that.
That's one.
4 hour value gap. Now the question becomes, do we already want to retrace into that 4 hour value gap, or do we already want to continue higher? So very simply said, do we already have a fair value gap right there pushing higher as well? For example, this 1 hour fair value gap sitting right there. If we already create at equities open, because equities open is of course crucial to actually trade right there for ES. If equities open stinks into those discount rates, creates a new fair value gap higher already, for example, 50 minutes, then we can just simply look to continue higher already. Where all we then need is a clear discount array in the form.
Oh yeah, this does a 1 hour fair value gap, so that's like, get used to 1 hour. I need to get used to 1 hour as well.
Off. Ideally for me, it's usually 9 out of 10 times it's a fair value gap that we can actually look to continue higher from. So before the next thing, I want to quickly define everything again. But the first step is again the draw liquidity, understanding what that target might be, which is again understanding the PD rates that I use as well. You can just simply copy them if you want to. After that, if we can create an argument again, looking at fair value gaps, looking at candle signs, the previous candle high, previous candle low, respect, disrespect candle, to then see the argument between the bullish person and the bearish person, seeing which argument is stronger. Once we find a stronger argument, we move on to now find the narrative. That is where a fair value gap ideally comes in. Once we find a fair value gap, by going down the time frames, which is pushing towards that drawn liquidity, that's exactly the fair value gap where we ideally want to trade off of. Because that PD rate is the PD rate where we are looking for our entry pattern. So for example, if we expect this PD rate right there to hold, again, we need time to support ID, so currently I would not want to trade off of that PD rate, but that PD rate is where we would now look for example, if we expect this PD rate right there to hold, again, we need time to support ID, so currently I would not want to trade off that PD rate, but that PD rate is where we would now look for our entry pattern. And time frames are going to depend on what type of trader you want to be. Now, really quick, whilst you are currently watching this video, on the back end, I'm also busy creating an own prop firm where every 2 weeks we want to trade off. It's in the description as well. And a 25k account to random person that has joined the Discord. The Discord link is in the description as well. And that's where you want to be. Now, really quick, whilst you are currently watching this video, on the back end, I'm also busy creating an own prop firm where every 2 weeks we will give away a 25k account to random person that has joined the Discord. The Discord link is in the description as well. And it's also where I will post updates on the prop firm itself. And again, don't feel forced to do anything for or with that prop firm if you do not fully trust it just yet. I can fully understand that with the current prop firm space as well with all the chaos. So you can also allow us to first build a great reputation, which again, I want to do by action and less by words. Now, one last thing, it's extremely important, this last thing, because I would advise to watch this next video, which is the market maker model full guide video from the market mastery. If you understand that video, where we ideally want to trade off.
Prop firm, like coming from someone like Ajo, it's like less likely to be a scam, you know. But I would expect like Ajo's pricing to also be like pretty good, you know.
Because that PD rate is PD rate where we are forced to do anything for or with the prop firm if you do not fully.
Because it's like a very quality guy, like
as well with all the chaos. So you can also allow us to first build
the content he puts out.
Now, one last thing,
I'm expecting his prop firm also to be like great quality, you know. It's like expecting his everything to be very quality based. So yeah, that's pretty much it.
Which is the market maker model full guide video from the market mastery. If you understand that video in combination with this video and a couple of
this is easy as well.
Videos, for example, after that, the one candle tells you everything. You have such an extremely advanced understanding. It's insane. So if you want to do that, here is the link to that as well. And then I wish you good luck.
I'm gonna
one candle equals a lot of fair value.
speed run this.
Candle tells you everything about what price will do next. And I'll show candle, as I like to call it. This candle is when we have a big body, at least relatively seen to the both the
respect candles. Let me just revise. Respect candle, disrespect candle, because this is mostly in like a manipulation type scenario. Usually wicks point through if it's like a manipulation scenario. My bad. I sent it on the wrong chat. Fuck. I sent it to fucking Cyclones chat. My bad. It's probably getting so fucking confused with this goofy ass PFP. Okay, never mind.
At the top right there, and this right here.
I don't think. Oh, this guy's goofy ass PFP.
The bottom right there. Ideally, you want a smaller.
Since he sends this bullshit, he said, "Look, guys," he said, "KYS." Keep yourself safe. What a PO nice guy. He said keep yourself safe. Because there's hackers and shit.
Wick at the opposite. So the opposite wick should be smaller. Whatever the body of the candle does is not super relevant. We're going to go over examples to make it even more clear. Now, if we put them next to each other, so we have the disrespect candle right there, and we have a respect candle right there, both the bullish variations. Then what happens in these different candles? So what happens underneath? And what I mean with what happens underneath is this candle can be any time frame, right? So this can be the weekly.
Yeah, my bad. I didn't mean tweak like that.
Be the 1 hour, can even be a 15-minute candle. Inside that candle, you will have multiple candles on the lower time frame, and those multiple lower time frame candles create one bigger higher time frame candle, relatively seen by the time frame you're looking at. So for example, 1 minute could be the lower time frame to, in this case, the 15-minute time frame, where in that 15-minute time frame you have 15 1-minute candles. So when, for example, we have one candles create one bigger higher time frame candle, you will have multiple candles on the lower time frame, and this can be the weekly, can be the. Now if we put them next to each other, so we have a disrespect candle right there, and we have a respect candle right there, both the bullish variations. And what happens in these different candles? So what happens underneath? And what I mean with what happens underneath is this candle can be any time frame, right? So this can be the weekly, can be the 1 hour, can even be a 15-minute candle. Inside that candle, you will have multiple candles on the lower time frame, and those multiple lower time frame candles create one bigger higher time frame candle, relatively seen by the time frame you're looking at. So for example, 1 minute could be the lower time frame to, in this case, the 15-minute time frame, where in that 15-minute time frame you have 15 1-minute candles. So when, for example, we have one singular candle that is a disrespect candle, what happens on the lower time frame? On the lower time frame, that can be seen as fair value gaps going higher. And the same, of course, can be said about the bearish variation. If we have one singular disrespect candle going lower, then that can be seen as multiple fair value gaps going lower on the lower time frame. So inside that candle. Now for the respect candle, this is a little bit different, because when we have a respect candle and we have a bullish variation, the bullish variation being a long wick at the bottom. Why? Because a long wick at the bottom is indicating to us that we had fair value gaps going lower right there on the lower time frame at first, because we moved lower at
Manipulation, distribution.
first. But afterwards, we moved higher again. So we had bullish fair value gaps going higher. So a long wick at the bottom actually creates a bullish sharp turn. And if you're not sure what a sharp turn is, a bullish sharp turn is when we have bearish fair value gaps going lower, immediately followed, or ideally immediately followed, by bullish fair value gaps going higher, where the bearish fair value gaps are then used as manipulation gaps. Now, what that exactly looks like in the chart, we will go over as well, don't worry. And the same can then be said about the bearish respect candle, because then we have a long wick at the top, which creates a bearish sharp turn. Bullish fair value gaps going higher first, then followed by bearish fair value gaps going lower. So a disrespect candle means that we have one-sided fair value gaps on the lower time frame, where a respect candle means that we have a sharp turn going lower. So a disrespect candle means that we have one-sided fair value gaps on the lower time frame, where a respect candle means that we have a sharp turn on the lower time frame, meaning simply said that we have likely a reversal on the lower time frame. Now this is only the basic.
Kill yourself. Okay, ways, keep yourself safe.
Because now we need to understand the third step, which is what then becomes the target. So where does the next candle want to trade towards? So here we are on NASDAQ on the weekly time frame, becomes the target. So where does it, meaning simply said that we have likely a reversal on the lower time frame. Now this is only the basic understanding, because now we need to understand the third step, which is what then becomes the target. So where does the next candle want to trade towards? So here we are on NASDAQ on the weekly time frame. Again, both the market and the time frame is irrelevant. It's all fractal, meaning it happens on every market, and fractal as in it happens on every single time frame. So I'll show you examples later on how you can use this on the 15-minute time frame to know where you should place your trade on the 1-minute time frame. Now, if we use a replay tool right here just to train our eyes to see this, then the recent candle that we see on the
Oh my fucking zit. Jesus Christ.
weekly time frame right there, what does that look like? That looks like a respect candle, right? Now, if we
I wanna pop this shit so badly, like it's so pointy and shit. I just wanna like pop that. You know, it's like fucking just get it out of my fucking, because it's like so pointy and it's like it hurts the more you fucking try to pop it, but yeah.
use a replay tool right here just to train our eyes. Again, we arrived at the third step. The third step being, what is the target right now? The easiest target you will always have is a previous X low and a previous X high. And what I mean by that is a previous candle high, a previous candle low. The X can be a 1 hour candle, 15-minute candle. Again, it's all fractal, right? So it can be any time frame. But the easiest target is always going to be the previous candle high and the previous candle low right there. So our goal on the weekly time frame right here is simply to predict, will we first trade towards the previous candle low or the previous candle high right there? Which side will we reach? Now, if we do this on the weekly, like we're doing right now, and we can even do it on the monthly, and we just know where the next monthly, weekly, daily candle is going to trade towards, that makes it very easy to know what the lower time frame.
Oh man, I'm starting to tweak right now because I've been sitting on this fucking chair for like the past 20 minutes. So yeah, hold up. There we go. We're good.
Is likely going to do, because again, the higher time frame, the stronger the time frame. So if the weekly wants to continue lower here, then the 1 hour, the 1 minute even will just follow that. So right here, so in order for us to identify which target we will reach first, this previous candle high or previous candle low, we need to determine what type of candle this is. This, as we know it, is a respect candle. Why? Because the long wick right there at the top indicates that there's on the lower time frame most likely a sharp turn happening. We are respecting something. What are we respecting? It's exactly what we're also going to go over. So the highest probability thing for price to do right here, the most likely thing for price to do, is for to first reach the previous candle low right there.
Short-term low, yeah. Closest drawn liquidity. Reaches for the nearest short-term low on a higher time frame, as that's the closest drawn liquidity. For example, let me just drag this real quick. For example, 4 hour short-term low, if I just take a snip of this dog shit. Right here, this is the fucking manipulation leg. Right after, I'm expecting a fucking reversal. And then go towards this on the 15 minutes. So let's say this is. What the fuck was that? My bad. My bad. My bad. My bad, Fortnite gangster. So you see this forward, and this is on the 15 minute. I'm expecting this to be on the 15 minute. My bad, Fortnite gangster. I am mean saying that shit, cause I just be fucking popping Percocets and shit. Okay, I don't do that. I'm tweaking right now, cause I've been fucking sitting on this chair for like past 2 hours and 20 minutes. Reaches for the nearest short-term low on a high time frame, as that's the closest on liquidity. For example, the short-term low, this daily chart, is the closest draw for forward. Simple, fucking simple.
Which we eventually see right there. Afterwards, what type of candle are we seeing? So let's mark again the easiest target. The easiest
It's rebalance in this fair value gap though, so you see this manipulation. So I'm expecting price to rebalance towards the
target we
side.
have is previous candle high, previous candle low. What type of candle is this? This is a trick question because
Bearish, but we see this fair value gap, so it taps into this, manipulates this, and then we have distribution right after. So depending on what the next candle says, we can confirm that theory.
to get this answer right, we actually need to go over the next step. But if we were only to look at the candle variations, then I would argue personally that this is a disrespect candle, right? So at first, we could expect lower prices towards the previous candle low right there. That would become our target. Why that is not the case and why that is a trick question is exactly what we're also going to go over in the next step. Because at this moment in time, I would actually expect higher prices, and I'll tell you why in a little bit. Where we see the next candle moving higher right there, and once that candle closes right there, we again
Told you.
do the same exact thing. We have this previous candle low right there and this previous candle high. What type of candle is this? This candle variation, again, the disrespect candle. So with a disrespect candle, we are likely going to move towards the same side. Because
Fuck, I'm tweaking. Where's Cyclone? Yo. What the fuck is this PFP, bro? I just want to like smack the shit out of this fucking dog. My bad, that's animal cruelty. Don't cancel
the
me.
one-sided fair value gaps. The respect candle is a reversal candle, where the disrespect candle
Fucking dog, bro. Like, what the fuck? Why is he staring at me like that's this bitch ass dog, bro? Like, what the fuck? Why is this dog just like staring at me, bro? Like what the fuck? What does this fucking dog want? And why is this dog telling me to fucking keep yourself safe? Well, I know what he really means by that shit, man.
is just a continuation. So here we can expect, if we want to continue, the first target being this previous candle high right there.
Okay.
Now this is where we add another target into the mix, because after that previous candle high, what actually is the next target? Meaning, and when I say target, in bullish conditions, the target is always a premium rate. In bearish conditions, the target is always a discount rate. The respect candle is a reversal candle, where the disrespect candle is just a continuation. So here we can expect, if we want to continue, the first target
Starts to fucking hurt because I was like fucking pointing at it. Now I want to break it more than ever. Just like get the fucking pain out. So then that would lead for more pain. Like trying to pop this zit will lead to more pain because I'm trying to pop a zit, which is like already hurting enough. But I'm trying to pop it because it hurts too much. But then if I pop it, it's gonna hurt even more. But I want to pop it because it kind of hurts and I don't want it to be there. But I don't know. It's a loop of shit, basically.
being this previous candle high right there. Now this is where we add another target into the mix, because after that previous candle high, what actually is the next target? Meaning previous candle high right there. Now this is where we add another target into the mix, because after that previous candle high, what actually is the next target? Meaning, and when I say target,
Probably gonna just like come lower, rebalance, and then go higher. You gotta see what's happening with the daily frame to really make that prediction.
in bullish conditions, the target is always a premium rate. In bearish
But
conditions, the target is always a discount rate. So at that moment in time, what is the next premium rate that price will reach? Well, above this previous candle high right there is this swing high right there, which is the next premium rate. So if we reach this previous candle high right there, and we want to reach the next premium rate, and the next premium rate is that one right there, how can
that's right.
we know if it wants to reach the next premium rate? Again, by looking at overall candle.
Goes directly to that like a penis. Fucking erection over here. Just like uses this previous candle high, previous candle high. Look at this dick. Put 2 balls around it. Look at that. My bad, I'm tweaking right now. That was so inappropriate. I'm gonna get fucking mad. What am I doing, bro? Like, some shit. Almost sent it to this goofy dog. Let me just close this shit.
Candle, how it wants to form on the lower time frame. Now, after we see this right here, I want to zoom out to the monthly time frame to show you something. To show you how fractal this is, if we look at the monthly time frame, on the monthly time frame, we see this candle right here. What's the most recent candle doing right there? That is again a disrespect candle. So that's one-sided fair value gaps on the lower time frame inside that candle. So what can it likely reach for? This candle high right there. It's the first, that's the easiest target. After that, what can be the next target? The next target can be that swing high right there. Perfect. So in a very simple process, you have determined the bytes actually, because now you have determined the direction and the drawn liquidity. Now our job is to find the PD array where we actually want to continue higher from. So if we want to reach this target and that target, then where can we continue higher from? This.
Check my phone. Well, nobody's here. Let me check Instagram. Let's see if there's at least one DM in my. Nope. Just doesn't seem like it. Fucking DMs are dry as fuck. Let's see what this is about. Someone. What the fuck is this? Kaleidoscope. Bro said kaleidoscope. That's crazy. Bro, Ronaldo hit like fucking 15 million subscribers or some shit. And like literally like what is this? Q short pre-market. Let me get model no SFTA. I think it's helping me a lot first to be. Appreciate it. Right. This guy's been posting so many fucking videos about trades. Like it's fucking unreal. Like he uses divergence mainly. My fucking internet's dog shit. See? He uses divergence mainly, but he has been posting so many fucking videos about this shit right here. I don't know, there's like so many fucking videos about this. But yeah. What the fuck did I just see? What is this video? This guy was proposing to a fucking female, and this other guy just pulls up and just fucking throws his wedding ring. Like, what the fuck? What kind of weird shit is that? And I'm fucking smiling as if that shit's funny. That's wild. Well, you just lost, what, 3 grand off your fucking. That's so dumb though. Like, why the fuck would you be doing that? Oh, he threw a fucking prop ring. It was a prank. Okay, that shit makes it better. I don't fucking understand shit that this language is in, but you get the point, so. What the fuck is happening here? Bro, this is like a nice ass spot. I know you guys can see this bullshit, but this is like a fucking nice ass spot. Oh my god, that shit in my face. Right, so, man, 2 hours, 30 minutes, just on my usual grind. Oh man. Let's see what this does.
Is now where you can go into the lower time frames, meaning you want to go into time frames below the candle you are looking at. And if you look at the monthly time frame right here, or any time frame, then ideally you want to go a maximum of 3 time frames below that. So in order for us to continue high, what do we need? We actually need a discount frame. Then ideally you want to go meaning you want to go into time frames below the candle you are looking at. And if you look at the monthly time frame right here, or any time frame, then ideally you want to go a maximum of 3 time frames below that. So look at. And if you look at the monthly time frame right here, or any time frame, then ideally you want to go a maximum of 3 time frames below that. So in order for us to continue higher, what do we need? We actually need a discount array, right? We need some kind of support that we can continue higher from. Now, do we have a monthly fair value gap, monthly order block sitting right there, which we can continue higher from before we reach this previous candle high and that high? Yes, we have an order block sitting right there, but it's quite unrealistic for price to make a retracement like this first to then continue higher. I think we will reach the target first right there before we even make a retracement, especially if the target is that close right there. So what can we do? We can go down the time frame to now find a new discount rate that we can continue higher from, especially if the target is that close right there. So what can we do? We can go down the time time frame to now find a new discount rate that we can continue higher from. But what do we see here? We again have this previous month's high right there and the swing high right there. We now arrive at step number 4, where we need to go over the different PD rates. Again, the different PD rates is not that difficult. It's just that we need to determine which PD rates are we using, because I do not like to have a lot of PD rates on my chart. I think it loses the accuracy of trading if you use a lot of PD rates. So I like to stick to fair value gaps, of course. Mitigation blocks, breaker blocks, order blocks, swing highs, swing lows, and previous candle highs, previous candle lows. Now that might already seem like quite a lot to someone who's not familiar with all the hundreds of PD rates out there. I can understand that, but that gives me the most accuracy. So if we mark out all those PD rates, then here we have a fair value gap right there, we have a fair value gap right there, we have a fair value area sitting right there in the form of that mitigation block, which is nicely overlapping with the fair value gap itself as well. I will actually refine this fair value gap towards the overlapping gap, and the reason I do that, if you have not seen previous videos, is because if we are not going to continue higher off the, I will actually refine this fair value gap towards the overlapping gap, and the reason I do that, if you have not seen previous videos, is because if we are not going to continue higher off the first fair value gap, then the second standalone fair value gap is also something we are likely not going to continue higher. Higher from, and the reason for that is because it's the same. This is one fair value. Find this fair value gap towards the overlapping gap, and the reason I do that, if you have not seen previous videos, is because if we are not going to continue higher off the first fair value gap, then the second standalone fair value gap is also something we are likely not going to continue higher from. And the reason for that is because it's the same. This is one fair value gap. That's also this area right there that I had just previously marked. The area of the fair value gap between that high is also 1. If price disrespects the first standalone fair value gap, then it will reach for the overlapping fair value gap, which is the overlapping part where we create mitigation block, break block, or order block. All right, so now we have a good idea where we can continue higher from on the weekly time frame, which also means that you do not need to go into the daily, into the 4 hour right now. If by going down the first time frame, you have now found the PD rate where price can continue higher or lower from, and that's enough. You do not need to go down another time frame, because that will just add to the confusion. Where again, the high time frame is the strongest. So if we are reaching any fair value gaps, then it's likely going to be the weekly fair value gaps right there. So looking at this, we can now apply the same thing, right? Because we have these PD rates right there. We have these PD rates right there, and what I mean with playing around with them is that if we look at the most recent weekly candle right there, we have a weekly fair value gap right there, which we can continue higher from. We have these weekly overlapping parts right there, which we can also continue higher from. We then have the recent candle being a respect candle.
Oh my god.
Well, what actually is it respecting? Well, in this case, it's respecting this previous candle high right there, which indicates to us that it might be sweeping that. So for us, the highest probability thing for it to do is most likely to continue lower first before we then continue higher. So what can you do on the lower time frame right there? Well, on the lower time frame, now the story becomes the exact same thing. Because if now the target is first the previous candle low right there, then find any fair value gap on the lower time frame going lower. Of course, again, stick to that maximum of 3 time frame rule, meaning you don't go to the 1 minute time frame to find a 1 minute fair value lower. And then you can simply target this fair value gap. If that one does not hold, then this becomes target right there. Now, before we dive into the lower time frame right there, let's first go over this example. Otherwise, it might be a bit too overwhelming. Now, eventually, what do? We come into that area right there. And the reason I expected that next candle to be an up candle right there. And again, yes, of course, this is hindsight. But we also do this every single time live in the money making team, and also even for free on the Sunday weekly forecast. At first, this of course looks like a disrespect candle, the down candle. But we're now coming into actually PD rates, discount rates that we can continue higher from. So it changes the story, because now this wick becomes suspicious, right? It's not necessarily a wick where you would expect low prices from. Well, standalone, that candle alone, yes, but in combination with now understanding that we are coming into a discount rate, that wick can already be seen as some kind of respect, actually. Of course, relatively seen, the wick is still quite small. So the next candle right there, if it wants to continue higher, it will again show the same signs that it is doing right there. And then eventually, what we're seeing is that we continue higher, reaching that first high, and afterwards we can also reach this high sitting right there. So that becomes the same story.
Wait, might pull back here a bit to rebalance this price range. Manipulation, the whole first line of defense, and then manipulation, and then distribution right after. So
because once we reach that high, we are also opening up in a new month. And if we delete all the old price action and we go back towards the monthly time frame, on the monthly time frame right here, we are seeing a pretty 50-50 candle, I would argue. And the reason I state that is because we have a long wick at the bottom right there and also a long wick at the top right there. So now it becomes important to read what the next weekly candles want to do right there. So with the next weekly candles, what are we actually looking at? Well, we are simply looking at the exact same thing again. We are now
see this manipulation wick, distribution towards the high, but then now it's gonna sort of manipulate and go lower again.
Respecting this swing high right there. That swing high is what we are respecting by a weekly candle. If we actually want to continue higher, then we will continue higher off of this weekly fair value gap that we have sitting right there. And we can even see that the previous candle, by the respect of that swing high, is a beautiful setup to actually move back into the weekly fair value gap. And yes, I know, I have said in previous videos as well, breakaway gaps are formed if we close above a previous candle high. So for example, this candle, the third candle right there, closes above this line right there. If it does,
breakaway gaps. It's like the thing right after the fair value gap, like on the top, the open wick. the top wick, this one. See, this is the breakaway gap. The breakaway gap. Fiji is a must for it to be.
Does that then, as a general rule of thumb, it's a breakaway gap. But what I've also mentioned during those videos, this right here is the most important part. Because right here, this candle, the most recent candle, the third candle, does not support the idea of that being a breakaway gap. So the general rule of thumb is an extremely general rule of thumb. And this is why it's so important to understand that making your trading fully mechanical is usually detrimental because there's a lot of variables right there. If it does that, then as a general rule of thumb, the previous candle high. So for example, this candle, the third candle right there, closes above this line right there. If it does that, then as a general rule of thumb, it's a breakaway gap. But what I've also mentioned during those videos, this right here is the most important part. Because right here, this candle, the most recent candle, the third candle, does not support the idea of that being a breakaway gap. So the general rule of thumb is an extremely general rule of thumb. And this is why it's so important to understand that making your trading fully mechanical is usually detrimental because there's a lot of variables actually going into it. So right here, we can trade into a weekly value gap. And from that weekly value gap, we are again seeing right there that on the lower time frame, we most likely have a reversal, sharp turn right there to continue higher of that towards than this previous candle high.
Lower time frame sweep and basically market making buy model. So you see this and you see a fucking sweep right below this shit. Fuck. This shit, and then you see a distribution leg right after. Towards the this is the manipulation. We have the distribution leg right after. Fuck. Towards this swing high. It's gonna go towards this. This is gonna be your TP. Or like your draw on liquidity, in other words. That's how it goes, basically.
So from the previous candle low into the fair value gap, previous candle high right there is now the target. And afterwards, we see again the same story where this is now disrespect candle, so previous candle high, again the target. Now this now becomes a swing high, which is also the target. And this is how this continues and continues and continues. So how can we now capitalize on this as well? So by looking at this weekly value gap, if we now go into the lower time frame, then we can see that we are indeed coming into this weekly value gap, creating a sharp turn, meaning we have a fair value gap in right there, fair value gap out. This fair value gap out right there, what does that do? Coming into the breaker high as well. Well, by looking at this singular candle right there, we can see the exact same thing happening again. So do we need to wait for this candle to actually close before we can trade the next candle? You don't necessarily need to. The next candle is higher probability to trade. As in, it's easier to understand what it will likely do because we already have the story of the previous candle. So if we want to trade the next candle right there, then what do we see? Well, we have these two targets right there. Previous candle low, previous candle high. Ideally, before we reach this previous candle high, which we will likely reach first, of course. Yes, I can see hindsight, of course, because this candle variation is a respect candle right there. So we are likely reaching the high first right there. It's a bullish candle. So before we reach this previous candle high, we will reach previous candle high. Ideally, before this candle. So if we want to trade the next candle right there, then what do we see? Well, we have these two targets right there. Previous candle low, previous candle high. Ideally, before we reach this previous candle high, which we will likely reach first, of course. Yes, I can see hindsight, of course, because this candle variation is a respect candle right there. So we are likely reaching the high first right there. It's a bullish candle. So before we reach this previous candle high, we want to ideally have fair value gap that is located in this area right there that we can continue higher from before we have reached this previous candle high. So what does that look like? Well, right here, if we first go into the 1 hour time frame to find our fair value gap, do we have any fair value gap before we reach this high right there? No. Okay, let's go down another time frame. On the 15-minute time frame, do we have any fair value gap that we created before we reach this high right there? Yes, we have this 15-minute fair value gap sitting right there, which is also our what? Our sharp turn. Now, this happened to sting into that fair value gap in the next candle, so during the next 4 hour candle cycle. But if it happened during the same candle, that's also perfectly fine, right? That's also a perfect entry. So that really depends if you want to wait for one candle to close, or if you already want to go into the lower time frame, where here on the 15 minutes, that itself can already be an entry, of course. Even the 4 hour could have already been an entry itself, depending on what type of trader you want to be. Now, here on the 15 minute, again, everything is the same, right? We again have the same previous candle high sitting right there, previous candle low sitting right there as well. Even whilst this respect candle is forming right there, all you need is a 1 minute sharp turn going higher to then place a trade to target this line, because this was the 4 hour previous candle high. Unfortunately, I can't go into the 1 minute time frame on this example, so I'll show you another example where here we see the exact same thing. If we start off with what type of candle is this? This is a respect candle. But what actually is it respecting? It is respecting a swing high sitting right there with the top wick. So if we mark out both sides of the candle, what can it reach first? Most likely and the highest probability thing is for it to reach first the bottom, so the previous candle low right there. If we leave that on, then besides that, we also have, of course, this 4-hour value gap, which we can eventually reach right there. Now, what we need to do is find, again, a fair value gap that is a bearish fair value gap, so we can take a trade to target the previous candle low and potentially the 4-hour fair value gap sitting right there. So on the 1 hour, we don't see a 1-hour fair value gap just yet. All right, on the 15 minutes, we have a 15-minute fair value gap sitting right there. And off that 15-minute fair value gap right there, you can now even go into, again, the 1-minute time frame, because the 1-minute time frame right here already has this fair value gap continuing lower right there, this fair value gap continuing lower right there, which eventually we continue lower off of the overall breaker that we see towards the left. Again, you don't need to enter in the fair value itself. Now, this method here is actually what I use a lot.
Oh, there's a breaker here. And a unique one, basically, because on the last leg we use it as an inverse fair value gap.
Of times as well, which we touched on briefly in market mastery, when you would enter on the creation of a fair value gap. So for example, this fair value gap right there is being created once this third candle right there closes. That third candle is a disrespect candle from what I'm currently seeing right there, meaning that the next candle can already continue lower. At that moment in time, I can closes. That third candle, fair value gap. So for example, this fair value gap right there is being created once this third candle right there closes. That third candle is a disrespect candle from what I'm currently seeing right there, meaning that the next candle can already continue lower. At that moment in time, I can already allow myself, if the RR is worth it, meaning where is the overall next target? Well, the previous candle low on 15 minutes was this next candle right here. And by the time that candle closes, it is now this candle right there, then this swing low sitting right there. And afterwards, of course, this was the first major target, that 4-hour candle low. So if we go back into the 1 minute, and on the 1 minute covering these highs, is it now easy for price to reach a 1 to 2 before the first major target? Yes, it is, because the 1 to 2 is already there. Perfect. Then the creation of the fair value gap right there won't give me that much RR where I'm actually dependent on it. So I can already enter on the creation of the fair value gap itself. Now, this is actually the tip of the iceberg on what we call candle science in the money making team in the mentorship. Now, if you now start to combine this with other sitting right there, and afterwards, of course, this was the first major target, that 4-hour candle low. So if we go back into the 1 minute, and on the 1 minute covering these highs, is it now easy for price to reach a 1 to 2 before the first major target? Yes, it is, because the 1 to 2 is already there. Perfect. Then the creation of the fair value gap right there won't give me that much RR where I'm actually dependent on it. So I can already enter on the creation of the fair value gap itself. Now, this is actually the tip of the iceberg on what we call candle science in the money making team in the mentorship. Now, if you now start to combine this with other concepts that we already touched on here on YouTube, you can see how much more sense they start to make. So I would highly advise to also watch this next video, because then it will make a lot more sense as well. All right, perfect. Thank you.
That's where I think I'll end the stream too. Unless your boy Cyclone is down too. I low-key want to have a hangout on Sunday with the boys. What the fuck is this? Oh, hell no. Wait, have I not subscribed to Cyclone? Oh yeah, he's here.
You have a second monitor, just keep YouTube open.
Oh, I was watching Instagram.
No, I was watching Instagram. Bro, this guy's a PC, bro.
See more far, okay.
Nah.
Keep your render distance at 10.
10?
Yeah.
Bro, this is like, he's running at 60 FPS. Yo, bitch ass boy.
Oh, oh, it's fellow. I.
What was the word for it? Keep yourself safe. Keep yourself safe. You're on my stream, bitch.
I'm here, man. May I
Nobody's watching it, so it's
Maybe
fine.
What?
get some food?
Look at it. No, he's trying
Okay,
to
so you
smash.
see those red colored cows?
No, he's trying to smash.
Yeah,
No,
what
he's
you
playing
do is
Minecraft.
Get a crafting table.
I gotta
get
save
some
little
wood
bro.
planks, and
I gotta
make
save little
balls.
bro because
Balls?
he's trying to become
Balls, yes.
he's trying to become an EDP.
And then go to the cow and right click them.
Damn! They give you food?
Okay, this game is boring, bro. I'm gonna keep it a buck. I don't really like that game. What's respected, disrespected. The PD areas that are disrespected and PD areas that are respected / disrespected. Drop top coupe in the back truck. Bench truck, got that shawty on my lap and I wanna have a 10 star. Have a 10 star. Hand toes fucking on the bench truck. What? Yeah. The fuck am I saying? I got this drop top cooped up. whip in the color ready to the. I just wanna leave at it. So. Dropship is not doing great, but we will get back on track once Teasy gets his fucking Wi-Fi back. You're always gonna be my heart. You subscribe to this guy. He has a pretty good beats. What is this? Let's see how this sounds. Nah, I don't like it. It's too generic. What is this?
My love, that's all I do.
Nah. It's nice, but I don't really like it. I don't know why. I don't know. I don't like that either. If it's too generic, no. This one was fire. I remember that. Shit was fire.
I used to be a broke and unprofitable ICT trader. But in the last 3 years, I went from consistently blowing all my accounts, losing tons of money, to making over 7 figures in trading profits, sometimes even making more than $100,000 in a month. I've traded prop firms, I've traded personal accounts, and I can tell you that if I did not get rid of my trading model, then I would have never gotten off the hamster wheel that many of you guys are stuck on right now. You're probably in one of two situations. Either you're new ICT or you are struggling with ICT. And in either one of these situations, my guess is that you spent a lot of time trying to find your own trading model or trading strategy. You invested countless hours on YouTube trying to watch all these different videos, go and back test it, you get good results, but then whenever you get out into the market, it just seems like it's not the same. You may be wondering, how does this guy reading my mind right now? And it's because I've been through the exact same thing. Just a couple of years ago, I would sit in front of my laptop, my eyes were glued to the charts. I was so laser focused that whenever my neighbor's dog would start barking, I would just jolt because I had been sitting there watching candles print all day, waiting for this precious entry model. And that neighbor, its dog barked all the time. So I have this memory in my head very vividly. When I would sit there and watch for this trading model to unfold, I knew that, I had to stay disciplined. I had to be a professional. I had to wait for this entry model that I'd planned for to unfold. But then there would be this voice in my head telling me whenever I'd watch the market and I would see what was going to happen and predict what was going to happen, but I would just sit on the sidelines because I was being a good trader. I was studying and I was taking this specific entry criteria that had 5 to 10 rules, and I just adhered to it. But there were so many days where I saw exactly what the market was going to do, predicted it, but just didn't trade. And at this point, I had lost a lot of money, so I was trying to take trading seriously. I can literally smell the printer ink on the page where I printed out my trading model, and it was multiple pages. Yes, I printed out my trading model, okay? Don't roast me in the comments, but I did this. I did this because I saw people had done it. I saw that this was accepted as this, strategic, thought out, calculated way of learning how to trade. And this went on for a long time. So long that I just kept losing money. And I got to the point where I finally started to question, if I hadn't seen results, and all I had seen was these YouTube educators or other people saying these strategies worked, then why was I just sitting there locked in, doing something that gave me no results, that didn't make sense to me, and that I'd only seen other people use? Why was I doing this? So finally, I decided to think for myself. And once I started thinking for myself and building my own trading system, instead of paying attention to 100 different rules, only then, that is whenever I became profitable. As soon as I became practical and flexible, it was like overnight my trading changed. Because all along, I knew what I needed to do, and so finally, I decided to think, doing something that gave me no results, and all I had seen was these YouTube educators or other people saying these strategies worked, then why was I just sitting there locked in, doing something that gave me no results, that didn't make sense to me, and that I'd only seen other people use? Why was I doing this? So finally, I decided to think for myself. And once I started thinking for myself and building my own trading system, instead of paying attention to 100 different rules, only then, I decided to think for myself, doing something that gave me no results, that didn't make sense to me, and that I'd only seen other people use. Why was I doing this? So finally, I decided to think for myself. And once I started thinking for myself and building my own trading system, instead of paying attention to 100 different rules, only then, that is whenever I became profitable. As soon as I became practical and flexible, it was like overnight my trading changed. Because all along, I knew what I needed to do, and I'd seen the setups present themselves so many times. As soon as I became practical for myself and building my own trading system, instead of paying attention to 100 different rules, only then, that is whenever I think for myself. Doing something that gave me no results, and all I had seen was these YouTube educators or other people saying these strategies worked, then why was I just sitting there locked in, doing something that gave me no results, that didn't make sense to me, and that I'd only seen other people use? Why was I doing this? So finally, I decided to think for myself. And once I started thinking for myself and building my own trading system, instead of paying attention to 100 different rules, only then, that is whenever I became profitable. As soon as I became practical and flexible, it was like overnight my trading changed. Because all along, I knew what I needed to do, and I'd seen the setups present themselves so many times. I just had to start thinking for myself. And the reason I'm telling you this is because, again, so many of you guys are in this exact situation right now, whether you realize it or not. So in this video, I'm going to teach you how you can leverage your trading strategy or your trading model to help you instead of hurting you. But as with anything, if you just watch this video and don't implement what I teach you, then you really didn't learn anything, because learning means you actually change your behavior. So right now, before you watch any further, go ahead and make a commitment that you're actually going to implement what you learned and take action on it. So let's hop right into it. First, let's talk about the psychological trap that is costing you money, okay? if you think that having a trading model that has 5, 6, 7, 8, 9, 10 different rules is ever going to make you profitable, you couldn't be further from the truth. Now, I see this a lot, especially on trading Twitter, especially Twitter, and a lot on YouTube. You see these people that they post these charts and they have a bunch of lines, all these different precise reasonings as of why price rebounded from this exact tick. And yeah, this is fun and fancy to kind of show off, but at the end of the bunch of lines, all these different precise reasonings as of why price rebounded from this exact tick. And yeah, this is fun and fancy to kind of show off, but at the end of the day, if you're always seeking perfection, if you're always seeking the stars to be aligned before you'll take a trade, then you're not going to trade much. And what's going to happen is you put yourself into this trap. And the trap is that you set yourself up for failure by having 1, 2, 3, 4, 5 different rules that have to come together in order for you to enter a trade. And when these things don't come together, what happens? Eventually, you pretty much have to break your strategy, because if you're getting one trade every week, it's not going to be enough for you to scale. Sure, you can go and backtest it and say, oh, well, if I only take this one perfect trade per week, it nets this much R and over time it's profitable, but it's not realistic. And that is where the disconnect between a lot of trading education and real world application is, because you can have something that's perfect on a spreadsheet, but it doesn't make you any money in real life. And if you have a very complex set of rules, what's going to happen is whenever you are trying to follow these rules and they don't present themselves, you end up breaking the rules. And what does that turn you into? A rule breaker. The way that you trade is the trader you become. And what that means is if you break rules, then you'll break all of your other rules, like risk management or other rules that are very important not to be broken, because you've set yourself up and conditioned yourself to break your rules, because you've set so many of them that you can't trade without breaking rules. I see people talk about very important not to be broken, because you've set yourself up and conditioned yourself to break your rules, because you've set so many of them that you can't trade without breaking rules. I see people talk about, I don't trade if there's any yellow folder news, I don't trade if there's red folder news, I don't trade if this, I need an SMT and 6 other things to take a trade. It's just ridiculous. And this stems from educators trying to sell you a fancy dream, because it may seem advanced to have a lot of different things at once, but I can tell you 100% you will make more money from a simple strategy that you can actually see on the chart, that you don't second guess, that consistently presents itself every day. So that's what we're going to talk about, and that's what I'm going to teach you today. Now, some of you guys may be thinking, this guy's a gambler, this guy's a degenerate, he's saying not to have a trading system. That's not what I'm saying, okay? So before people try to clip the video or say Casper told me to gamble, I didn't say that. But what I am telling you is that balance is key, okay? You have to have a balance between risk and safety. So if you don't have a balance between these two elements, then you are going to swing the pendulum way too far to one side, and you become this hermit sitting in a turtle shell that you can't take any trades. So you have to have balance. You have to have a little bit of that mentality in you where you're going to be aggressive, where you're going to try to make money, where you want to trade, where you pull the trigger. And this is why I always say I like to keep a mechanical checklist of discretionary aspects. And we're going to get over what that means later in the video. But the main core thing I want you to focus on here with balance is so many people, they start out trading, and what happens is they lose a lot of money. They go through this phase that all traders go through, where they go through some horrible loss, and they say, I'm going to do this the right way. But then what happens is they swing way too far to one side, and they become this hermit trader that has this super strict strategy. They only risk 0.5% or even less than that, and they pretty much sign themselves up to never make any money. Sure, they protect themselves from losing money, but remember, trading is about risk management, not risk aversion. And if you try to avoid risk and you try to avoid losing money, then you will lose money and you'll never make money, because without a proper system in place to make sure you're able to attack the markets, then what's going to happen is you're just going to sit in front of the screen. You're going to build all these bad habits from trying to be responsible. And this is one of the most common things that I see with intermediate traders, not so much beginner traders, but I also see it with analytical people, like any of you guys who are programmers or visible. And this is one of the most common things that I see with intermediate traders, not so much beginner traders, but I also see it with analytical people, like any of you guys who are programmers or anything like that. I see that a lot with those people, is they're so calculated, and it feels like you're doing the right thing. You feel like, wow, I'm doing this the professional way, making on my spreadsheets, doing hundreds and thousands of back tests, but that's not going to make you any money. It's not how this business works. That's not how you make money in this game. And this is what I like to call the trader's dichotomy, because as with operating at a high level, and it's not make you any money. It's not how it's doing the right thing. You feel like, wow, I'm doing this the professional way, making on my spreadsheets, doing hundreds and thousands of back tests, but that's not going to make you any money. It's not how this business works. That's not how you make money in this game. And this is what I like to call the trader's dichotomy, because as with operating at a high level in anything, operating at a high level in trading means that you have to balance. You have to balance risk and safety. You have to balance when to trade, when not to trade. You have to balance being disciplined but not too rigid. You have to balance being outgoing but not careless. And you have to really find your flow. And there are some things that nothing but time can replace. But I'm going to give you an actionable strategy so you walk away from today's video with something to really find your flow. And there are some things that nothing but time can replace. But I'm going to give you an actionable strategy so you walk away from today's video with something to go out and implement. That way, as long as you put the work in, you're going to be able to revert to the damages that having a strict trading model have caused you. Now that you understand why this is so important and how it hurts you, and I'm sure many of you guys are sitting here realizing the situation you're in, we're going to talk about what you're going to do. So like we said, being overly strict is likely to make you unprofitable. So many people think this is professional and the right thing to do, but it's just going to hurt your trading. Okay, point blank period. Next, and I hit on this a little bit, but simplicity scales and complexity fails. If your trading strategy has too many criteria that are too specific, it will never work. It's similar to any kind of system you build in a business or in life. The more complicated you make it, the less likely you are to succeed. This is why people who have morning routines that last 2 or 3 hours, they never last longer than a couple of weeks at best, and people end up building the identity of someone who sets goals and then throws them away. How many of you guys have done this for like a New Year's resolution or something? And I've done this. I remember whenever I first started getting dialed in, I wanted to wake up, meditate for 20 minutes, cold plunge, run, do all this stuff, and you realize that the more steps there are in a system, the more friction there is, and the less likely you are to actually do it. And again, the big danger here is not necessarily not completing the system, but building the habit of being someone who doesn't follow through on their plans. Next, you have to break free from this YouTube hamster wheel, okay? This is something that I see so many people on. They watch a video. This may be what you're doing right now when you're here. You watch a video and you take it, you go out in the market, you try to implement it a little bit. It may work for a short amount of time, or maybe it doesn't work, and what do? You hop right back to the next YouTube video instead of giving it time and actually committing a plan. And that's why in this video, I'm going to put together a step-by-step action plan on how you can overcome the dangers of having a trading model. Next is you have to understand it to be flexible, okay? You can't be so rigid or so stubborn in your system that you ignore opportunities. If you're looking at the market and you consistently see yourself calling out a trade but not taking it, don't just ignore that and tell yourself that you're being reserved. You need to look into it, figure out why am I missing these trades. If you see yourself taking profit too early, and then the market runs without you, and you just tell yourself, oh, I'm just being consistent with my profit taking. But if you see that over time, especially if you're unprofitable, if you see that a lot of trades run very far without you, and you just say that you're being disciplined, what the truth is you're just finding security in doing things one way and not taking the information that the market's giving you. Now, I made a whole video on how you can hold your trades longer. I'll leave that down in the description, and the strategy I use is called price weighting, and you can teach this to a 5-year-old. It's literally that easy. And it will add multiple R to your average risk reward. And for many of you guys watching, that will make you profitable. Notice how just one key change like that, instead of watching 100 different YouTube videos or studying these complex strategies or buying courses, just getting an extra 1 to 2 average risk reward could be the change that makes you a profitable trader. So you can't be so rigid that you ignore information the market's giving you, because this kind of feedback and you being flexible enough to intake it and actually implement it is what is going to be the deciding factor in how long it takes you to make real money from the markets. Now, we talked about this a little bit, but risk management is different than risk aversion. That's why it's called risk management. As a trader, your job is to manage risk so you make more money, not to avoid risk. So notice how whenever I say risk management, the first thing you think about is how you're going to avoid losing a bunch of money. And of course, that is part of it, but that's not all of it. And so many people set the wrong North Star and the wrong goal whenever they build their risk management strategies, and all they're worried about is protecting themselves from downside. But a good risk management, whenever I say risk management, the first thing you think about is, how you're going to avoid losing a bunch of money. And of course, that is part of it, but that's not all of it. And so many people set the wrong North Star and the wrong goal whenever they build their risk management strategies, and all they're worried about is protecting themselves from downside. But a good risk management system is not only going to do that, but it's going to help you capitalize on your upside. This has to be something that you figure out on your own. But that's not all of it. And so many people set the wrong North Star and the wrong goal whenever they build their risk management strategies, and all they're worried about is protecting themselves from downside. But a good risk management system is not only going to do that, but it's going to help you capitalize on your upside. This has to be something that you figure out on your own. Everybody is different. But I have a sample risk management strategy, and I'll leave a link in the description to that video. It's a full trading plan, has strategies, everything at risk management. But the key here is you have to understand that there's a difference between risk management and risk aversion. And the sooner that you shift your perspective to understand that, the sooner that you'll be able to build a trading strategy that will actually help you. Now that you understand how trading models can hurt you and risk aversion, and the sooner that you shift your perspective to understand that, the sooner that you'll be able to build a trading strategy that will here is you have to understand that there's a difference between risk management and risk aversion. And the sooner that you shift your perspective to understand that, the sooner that you'll be able to build a trading strategy that will actually help you. Now that you understand how trading models can hurt you and what to do to fix it, I'm gonna give you a step-by-step game plan that you're gonna walk away from this video and go out and implement. That way you're able to see results. So the first thing that we're gonna do is we're going to reduce our entry criteria to 3 key factors. So what I use is just a higher time frame key level, lower time frame displacement, and risk to reward. Now, I will also leave a link down to this video, and I'll just put action plan. There's 3 videos you can watch. That gives you a lot of stuff to learn, but it teaches you this exact system step by step. Next, you need to set up your charts with just 2 entry time frames. So you can have your higher time frame levels and be aware of the daily and weekly charts, but on a day-to-day, you just need to focus on 2 entry time frames. I have 2 options here for you. If you are brand new, I recommend just going with the 1 hour, right? The 1 hour is your higher time frame, that's where you're finding key levels, and then a 5-minute for execution. Now, if you've been trading for a little longer, and this is what I use, M15 with an M1. So this is 1 hour chart, 5 minute, 15 minute, 1 minute. Now, this next one is so important because you have to get off this YouTube hamster wheel where you're just watching videos, listening to what one trade influencer repeats from what he heard from another like a parrot. You have to actually go out and build rational confidence. So the way you're gonna do this, step 1, is gonna be by starting a trading journal. Now, this is so you can actually track your results. Mind blower that you should do that, right? A lot of people don't do it. And if you are doing it already, are you doing it correctly? Are you going back and you can actually track your
Like, parrot, that was kind of funny.
results? Mind blower that you should do that, right? A lot of people don't do it. And if you are doing it already, are you doing it correctly? Are you going back and seeing which trades did you take that ended up running for longer, that were winning trades? Do it. You're gonna do this, listening to what one trade influencer repeats from what he heard from another like a parrot. You have to actually go out and build rational confidence. So the way you're gonna do this, step 1, is gonna be by starting a trading journal. Now, this is so you can actually track your results. Mind blower that you should do that, right? A lot of people don't do it. And if you are doing it already, are you doing it correctly? Are you going back and seeing which trades did you take that ended up running for longer, that were winning trades? Or which trades did you take that ended up stopping you out and then running to your target? In these pieces of data, you're gonna be able to infer important things to be able to make a change to your trading strategy, but you have to be flexible enough to intake this information. And don't be so stubborn that if you're trading something that isn't working, or even if it is working, that you can't get better. Make sure to always take in the feedback that the market gives you. That is going to teach you more than I can, more than any human being can, and you have to be flexible enough in order to see it to be able to benefit from it. After you've watched the videos that I have down in the description that teach you an exact trading strategy that is simple, that is not complicated, I want you to commit to 100 trades. Sounds like a lifetime, but in the reality, if you want to be a real trader, meaning that you want to be a career trader, you will take thousands of trades throughout your lifetime. So what is 100 trades if it means maybe figuring out the holes in your system? That way you're able to become a profitable trader. So right now, commit, if you're going to do this at all, commit to it for 100 trades. And this is what you should do for any strategy, not just this one. And anytime you make a change in anything to do with your trading, whether it's your risk or anything and you're testing it, you need a large sample size. And to be honest, 100 trades really isn't even that much, but you also don't want to go for too long and just waste time. So 100 trades minimum when you're implementing a new test. If you are ever sitting in front of your screens and the market just goes days without you being able to find a trade, then it's likely you don't understand how to identify market conditions. And more so, you probably don't have different trading strategies for each market condition. And this also is one of the biggest mistakes that I've seen new traders make, is they just have one trading model and they expect it to work in all conditions. And this could not be further from the truth. So what you're gonna do, and this also is market conditions. Sitting in front of your screens and the market just goes days without you being able to find a trade, then it's likely you don't understand how to identify market conditions. And more so, you probably don't have different trading strategies for each market condition. And this also is one of the biggest mistakes that I've seen new traders make, is they just have one trading model and they expect it to work in all conditions. And this could not be further from the truth. So what you're gonna do is identify the 3 different market conditions.
It's basically saying this.
Further from the truth. So they expect it to work in all conditions. And this could not be further from the trading strategies for size. And to be honest, 100 trades really isn't even that much, but you also don't want to go for too long and just waste time. So 100 trades minimum when you're implementing a new test. If you are ever sitting in front of your screens and the market just goes days without you being able to find a trade, then it's likely you don't understand how to identify market conditions. And more so, you probably don't have different trading strategies for each market condition. And this also is one of the biggest mistakes I've seen new traders make, is they just have one trading model and they expect it to work in all conditions. And this could not be further from the truth. So what you're gonna do is identify the 3 different market conditions, which are trending markets, ranging markets, and choppy. Now, I stay out of choppy markets, but I have trading models for trending and ranging markets or consolidations, and that is also in that trading plan video down in the description. So I'll leave those links down in the description. Make sure to watch those videos, comment, and let me know if you have any questions, and also make sure to subscribe because I post
Trending,
in order to become a profitable trader,
ranging,
all the way
consolidating,
to
in other words.
Thank you guys for watching, and I'll see you in the next one. Markets or which are trends, and
Choppy
that
is basically way too much
also in that
shit
trading plan
going
video
on.
down in the
It's
description.
like,
So I'll leave those links down in the
ooh,
description.
fucking
Make sure to watch those
edgy.
videos, comment, and let me know if you have any questions, and also make sure to subscribe because I post everything that you need in order to become a profitable.
Alright guys, almost 3 hours. I'm gonna wrap it up. Literally just 1.5 minutes. But yeah, so I have a neck pain right now, so I gotta fix my neck. Fix my neck. That sounds kind of funny. Go through my notes and just get better overall. Go for more trades. Right now this is going really bad because it's out of session, so that's fine. But it's okay because we're gonna be in the green zone right after, because it's out of session right now. But it's okay. Alright, so yeah, pretty much it's the last 60 seconds of the stream, so at the 3-hour mark I'm just gonna end the stream. So basically, in other words, thanks so much for anyone who came by, and I appreciate you guys being here. I'm just gonna be doing my thing, just daily trade journaling, and just getting better overall, just becoming a better trader. As you can see, I have a 44 pages of just backtesting overall. And you guys can see what I did right, what I did wrong, and just overall what's good, what's bad, what's horrible, and everything. So yeah, that's pretty much it, guys. I hope you guys enjoyed this whatever and yeah, see you guys in my next one in 14 seconds, because I don't want to I don't want to end this on before the 3 hour mark, because we're so close. We just want to end it on a rounded off number. So yeah, so that's pretty much it, guys. Gonna go to sleep, just watch a few